Uh, all right. Another beautiful day. It's actually not so beautiful out where I am right now. Good to see all of you. A lot of familiar faces in the house. Bobby J, Matt Cox, YS. Go down the list. As many of you. Matt Cox, can you hear me? Okay. Matt
Yeah.
Cox, you there? Yeah. Yeah. Cool. Thanks. So, a lot to talk about, as always. And it's really amazing. When I got up this morning, I had no idea if we do the space, but there's always something to talk about. And on a day-to-day basis, I just let the market direct the conversation. I put a few talking points in the title of the room. The Dunning-Kruger Effect, which I know is a favorite of Mt. Gox. We need to talk about that a little bit. It's a term that's much bandied about in FinTwit, but I don't think people really understand the full consequence of it. And I really would like to talk about that. And then the increasing dialogue around the Fed in the economy, inflation, rates, credit. I really would like Bobby J to talk about that a little bit. You've heard me say many times in the past that the Fed's trapped. They don't have a plan. I think they're just making it up as they go along. And we're now starting to see Mr. Market giving the pushback to that and the market response function. And maybe the bond market vigilantes who were thought to be an extinct species, maybe they're going to make a comeback. Who knows? I see Doomberg has just entered. Great to see him. He was in Michael Guyad's room last week. We had a chance to talk. I urge all of you to follow Doomberg. He's one of the smartest guys out there. He has a great Substack. I don't have any commercial affiliation with him, but he is a must follow. He's one of the sharpest guys in the street. So looks like we've got a lot of smart people in here today. So let me just kick it off by talking about a couple things, and then I want to open up to get a free flowing food fight going. It's always the best way to do this, but just to set the ground, or the ground rules, or not the ground rules, but the tone for the room, or where I'd like to go. Um, the markets are voting with their feet. It's as if you've had these last few many years situation where, similar to that, when the beach ball is held well below the surface of the water and you let go, it rises to the surface. And we're coming out of this period where you've had extraordinary amounts of intervention in markets, particularly in the rates market, and that's starting to normalize. And I think people are ill prepared for what the full consequences of this are going to be. You combine that with what's going on in some of the commodity markets. And yes, of course, the recent events, the tragic events in the Ukraine have poured gasoline on the fire, no pun intended, of what was already a very bullish setup in the oil patch. But for those of us that have been in these rooms for months and months and months, the bullishness was not predicated upon any idea that there was going to be a Ukrainian conflict. Rather, it has to do with the supply-demand situation in the market, that there's really been no supply response, that we're coming off of 8 years of huge decline in capital investment in energy, as well as in many other extractive commodities. And those are problems that did not present themselves overnight, nor will they be fixed overnight by whether or not Jerome Powell raises rates by 25 or 50 basis points. And I think that's really the bigger picture issue behind what's going on in commodity markets. It's yeah, of course, if the Russia thing hopefully would get settled, which I unfortunately don't think it will. Yes, you would see things sell off, but that's not really the main issue here. That's the main plot, and it's the tourists, the Jim Cramers of the world, people chasing headlines and sound bites that are reacting, not anticipating. They just don't get it, and so I think we're in a very perilous time. We've seen this rally the last couple of weeks, which, in my opinion, is just a rally from oversold conditions. As someone tweeted out the other day, may have been someone in this room, I don't really recall, about the Fed: watch what they do, not what they say. Or to use the basketball analogy, hips don't lie. If you're playing defense, watch the guy's belly button. Forget about the open mouth operations. They've still, money supply growth is still running up. I can't remember the number. I think it's like 16% year on year or something like that. So they've not yet begun to tighten, as John Paul Jones would say. So I think we're on a powder keg. We got a powder keg right here. It's very volatile. Trying to call the market day to day or week to week is a fool's errand. It's not what we do here. It's not what anyone with an ounce of common sense would try to do. I guess if you're running a Discord, if you're running a live trading room and trying to hawk a Discord service for $99 a month, and as ponytailed former NFL football players who appear on CNBC, but I shall not name names, would say price is truth. No, it is not. That is one of the most idiotic things that anybody has said in FinTwit in memory. If you're trying to look at the fundamentals and to where the puck is going, not where it is, you have to stand back. I think the shorter term you're focused, the more prone you are to being wrong. And unfortunately, because of social media and the networks and Jim Cramer's of the world, everyone's focused on the sort of attention grabbing story du jour. Don Cox, retired former investment strategist, lastly, I think for BMO, had an illustrious career, was at Schroeder Wertheim for a while, Harris, Investment Associates, et cetera, et cetera. Another wise old sage who I hope to get in this room before long. I've been in contact with him. He had this idea, and I apologize if some of you have heard it, but I suspect most of you haven't heard this story. He said, you always should invest on the basis of what's on page 16 of the newspaper, not on page 1. Page 1 is already in the price. It's the story that's warming up in the bullpen on page 16 that you want to be invested in. And that's the way I try to pursue things. Because if you're just chasing the headlines, you're going to be late, you're reactive. It just doesn't work. It's no way to roll. You got to try to anticipate. And I think if you get beyond these Ukraine, Russia headlines, and you think about what's really going on, that we have a supply side, there's been, again, inadequate investment in many extractive industries. We now have a supply side shock where whether it's energy or pig iron, rebar, whatever, there's a whole bunch of commodities, grains, where supply is being withdrawn from the market. That can only mean one thing for prices. And you may say, okay, well, that's in the short run. It may go down in the longer run. But what we really need to think about is, what, in the case of Russia, for instance, with energy, what's the long-term effect on this? You look at how many major Western oil companies are withdrawing from Russia. So what does that mean for production? Not this year, but 2, 3, 4, 5 years out. Will the necessary investment be there? And again, people are just so reactive; they're not thinking. I think with the real inefficiency here, and I hope Doomberg will speak on this because he's written a lot. I really would like for Doomberg to talk. Go to his, and he'll tell you. I don't know if it's Doomberg.com or where it is. Maybe Doomberg, you can put it up in the nest. But he's written some great pieces now for a long time about coming food shortages and so on and so forth. And that's the real story. That's the real story. And all this other stuff about what's the Fed going to do. I mean, as I've said once, I'll say it a million times. The Fed can't drill for more oil. The Fed can't grow more wheat. This is the real problem. And so you look at the policy responses that they're employing, try to game out what they're likely to do and what the market's likely to do in response. So, for instance, they don't want to engender a bear market. Okay, fine. So they're not going to tighten, or not tighten as much as they should. They're still running a highly stimulative policy. So what does that mean? The bond market calls BS on that. And you saw yields, go up 40, 50 basis points in 1 week. We've been talking about that for weeks. That's nothing new. And then, for all the Tina idiots out there, oh, stocks are the best, cleanest shirt in the dirty laundry. They're cheap relative to bonds. And look at the equity risk premium. I mean, that's stockbroker economics at its worst. Plug in, a 50 basis point increase in the 10-year, which is what we got. And all of a sudden, the equity risk premium ain't looking so hot anymore. Not to mention the fact that, you look at how much many stocks have gone down. Forget about the soundbite indices. Let's talk about the individual names. I think there's fully a third of the S&P, which is yielding more than the 10-year right now. So there are a lot of moving parts here. A lot we can talk about. We've seen a big rally in the last couple of weeks. As I said, market was very oversold. There's a lot of shorting going on. There's been a confluence of events. I'm looking at something. The commitment of traders data came out yesterday. Alan Levinson, friend of this room, I hope he comes back in, was talking about yesterday how that report came out. And in the 5 days of trading to Tuesday of this past week, the hedgers, who are amongst some of the smartest money, they had covered 130 billion of their short. They went from 160 billion short to 30 billion short. But as someone rightfully pointed out, I think with Schmuckatelli, that's actually a bearish, not bullish, because the source of potential buying power just got spent. On top of that, you have the retail investors who've been piling in like crazy. Witness it's reflected in the data, but also anecdotally, look at individual names. The meme stocks went nuts again. You also have some of the systemic traders, the risk parity guys, the vol targeting guys. They're momentum players. So if you're a vol targeting fund and vol comes down, that means you can expand your balance sheet. And when vol goes up, you got to contract your balance sheet. So it kind of just aggravates or accentuates whatever the trend du jour happens to be. So price is not truth. If there's one thing I can tell you, price is not truth in many of these cases. In the meantime, earnings estimates start continuing to roll over now for the market overall. Liquidity is continuing to tighten. Michael Howell, I hope he comes back in this room. But by the way, I tweeted it out. Please, please, please watch it. Michael Howell in conversation with Tony Greer. Like, what could be better than that? Tony Greer both those guys have spoken in this room. Two of my friends, two of the smartest guys I know. Michael was laying out the case for, it was about liquidity, is about liquidity, it will be about liquidity, and the news is not good on that front. Just quickly, and I'm going to stop my rant, looking at a couple other things that I jotted down here that I want to talk about. Really interesting. I'll tweet this out, but if you look at what's happening to positioning in commodities, it's remarkable. You might expect that with markets going up, it would have been accompanied by a bunch of massive buying. But if you look at the CFTC data, this is courtesy of J.P. Morgan. Open interest has declined in a lot of commodities, and if you look at cumulative flows across all the commodity markets, it's actually been going down, not up. So if you told me that commitment to traders data showed everyone's wildly, in and who's left to buy, I'd be like, oh, okay, that's not a good sign. But it's the opposite. Marks have been exploding and people have been selling. And whether it's because they're getting stopped out because of margin and there's a lot of problems with volatility and increased margin requirements or whatever, it doesn't really matter. The point is positioning has gotten lighter as markets have gone higher. So that's incredibly bullish for commodities, which for all you buy the dippers in bond land, like, I wouldn't hold my breath on that. Let's put it this way. It's not a trade I would do. All right, enough of my rant. As always, it's best to hear from others. So, Mt. Gox, let's hold the Dunning-Kruger effect for just a little bit later. I'd like to. Oh, I see Doomberg's in the room right now. So let's go to Doomberg. If you're willing to speak, I'd like to have you. You know what? It's a special pleasure for you to be in here. So we're going to change the rules of engagement. I didn't realize you were going to be here, and with your blessing, if you're up for it, maybe give us like 5, 10, 15 minutes if you want of your current thoughts. I thought you were very on point and cogent and very insightful in your comments in Michael Gadd's lead lag report room the other day. So I don't know if you just want to channel your inner lead lag report spiel or whatever you'd like to say, but I think it'd be really useful to the room, and I expect you'll probably have, if it's all said and done, there'll probably be upwards of 8,000 or 10,000 people that hear you when they all listen to the replays. So, Doomberg, if you're up for it, I'll let you have as much time as you want. If not, if you want to make a comment, that's fine. But I know people would greatly benefit from your insights. So, Doomberg, good to see you. Good to hear from you. Please unmute yourself. The floor is yours. I don't know if he's there, so hopefully he'll come back. Bobby J, you there, my friend?
Yes, I am.
All right, so Bobby J. So Bobby J, if you don't, to remind you that don't know him, long time Wall Street veteran, decades of experience. He's an older guy like me, but he looks at the world through the lens of credit and fixed income. And so, Bobby J, I mean, as you and I have this standing joke where you're on guard, you're on the bridge to alert to trouble in credit land. But before we get into credit land specifically, just maybe fixed income. I look at where bonds are, how they've done. People say, "Oh, it's oversold. It's oversold." Well, yeah, but if you look at the long-term picture, you're breaking major long-term downtrend lines. And I think, with apologies to our Bitcoin maxi friends, you got to zoom out. And to me, I think rates are firmly going higher, no question. And so, what's your view on rates and on credit? Thank you, Bobby.
Yeah, I want to say two things first. And one is um, there's no point in me coming on here and telling everybody things that they can read in the paper, here on the news channels, or here in the rooms. And so I want to offer something that I think is being overlooked today. Secondly, I agree with you 100%. The hips don't lie. I always refer to the 2 and 5 year part of the curve as the hips, and you keep an eye on that, and you'll know what's going on. I think the 5 year going to 3% is a really big refi problem in corporate credit and high yield, and Michael Howell would agree with that. But before I go there, I want to say one thing. I'm going to ask you three rhetorical questions, George. Number one, is the Fed that stupid or that out to lunch when the market is telling them that inflation is higher, that rates are moving higher? They have never lagged behind twos and fives like they have today in probably the last 30, 40 years. Um, so if they're not that stupid, if they're not that out to lunch, if there's a fire blazing outside and they're sitting in the firehouse smoking cigarettes, drinking beer, and watching March Madness, why are they doing this? So the answer to that question is the Fed has four mandates: employment, inflation, financial stability, and the cost of financing US government debt. And that fourth mandate has grown considerably, to the point now we have merged Treasury and the Fed, and we might as well call it the leader Jay Yellen, sorry. And so I'm going to ask you this question, George. If you had 28 trillion in debt and you're the biggest borrower in the world, and you could borrow at 3%, would you rather have inflation be 6% or 1%?
Bobby J, again, like you've heard me, you and I are old friends. We joke about this. You've heard me use this line before. I'll use it again. Never ask a question you don't know the answer to. So the answer to the question is, of course, they want 6%. It's why it's again, watch what they do, not what they say.
Right.
The debt is nominal. Sorry, the amount of debt stays unchanged. But if you conflate economic activity through higher inflation, and you can thereby devalue the debt by having higher tax revenues, that's the way you roll. So, Bobby J, do I get an A or a B for that answer?
You get an A, and we're exactly right. But this is not something you hear, right? I mean, how many times do we have to steer people away in the rooms and elsewhere from saying, what is Jay going to do at the next meeting? Is it going to be 50? Is it going to be 100? Is it going to be 25? I mean, forget your any amount of time you waste thinking about that is a waste of your bandwidth. And you should be thinking about how you're going to position. So, and by the way, they have sculptured this curve in terms of their liabilities and their quantitative easing. They made one basic mistake because they made two policy errors. One is too much stimulus, but also that they didn't extend the maturities of the Treasury debt. So I think we should not think that the Fed is on our side in terms of inflation. So that tells me that this thing is going to run longer and harder than we think it is, or we should think that they care. It's like you live in a bad neighborhood, you call the cops and they don't come. This is what we have today with this Fed, and we should expect inflation to stay higher.
Really appreciate that, Bobby. So let me ask you a question for that. So we get higher tax revenues. One of the things that's being thrown around right now, filed under the heading of stockbroker economics. And again, for those who haven't heard me the last couple of days, there's a very erudite, now retired investment strategist called Andrew Smithers. Used to be head of SG Warburg Equities, I think. Then had his own consultancy. He's in that sort of Michael Howell type of league. And he had this rather pejorative term called stockbroker economics. And it's a sort of soundbite nonsense that, someone utters and then people latch onto it because it's catchy or it sounds good. But it's bereft of any fundamental underpinning. So for instance, the Fed model, complete and utter garbage. All right, complete. I mean, you'd be thrown out of a freshman finance class at Wharton if you uttered the Fed model. But you have these geniuses in Wall Street firms that go around talking about the Fed model. Well, the new version of that is, or a new version of that is, and I think it's very ill-considered.
You're breaking up a little, George.
Sorry. Hold on. I wasn't moving, so I don't know what the problem is. Mount Cox, are you been able to hear me okay, Mount Cox?
No, you're falling out a little bit.
All right. I don't know why. Please speak up whenever you can't hear me, because I have not been moving. I don't know what's going on. So please speak up when you can't hear me. So in any event, this idea that the yield curve has been flattening, and Bobby J, this is a question for you. The yield curve's flattening, and ergo, we will have a recession in 12 to 18 months. End of story. Do not pass go directly to jail. Well, hold on. It is true that every recession has been preceded by an inversion of the yield curve, but it is not true that every inversion of the yield curve has produced a recession. And so some people go running out and they say, "Oh, we're going to have a recession." I'm like, whoa, time out. So point number one I just made. Point number two, if you consider just how stimulative monetary policy is, going back to this idea of having a beach ball suppressing underwater and letting it float up, I don't care if the curve's 20 basis points, 100 basis points, but the fact that real rates are so far below, they're so negative, that it's still incredibly stimulative. So, people running around calling recession, this is very important actually, because to me, the only way, or the most likely way, that we're going to get any relief on oil prices and other commodity prices and wages and so on and so forth is if we have a real tightening, if we have a real recession. And if we don't, I think this stuff's just going to continue to run. I mean, I don't want to get hysterical, but I retweeted out something yesterday that somebody had put up there as a picture of Gavin Newsom, the governor of California, blathering on about whatever it was, $400 or $500, tax benefits for people, not even low-income people, everybody, even electric car owners, tax relief for higher fuel prices. And the gist of the tweet was, this is how Weimar begins. So, Bobby J, I'm on a ramp. This is a question for you. If they go down this road of, just listening to you talk, go down this road of they don't tighten the way they would. Again, watch the hips, watch what they do, not what they say. We continue to run a very stimulative policy, despite the fact the yield curve has been flattening. I just think commodity prices and wages inexorably continue to spiral upwards, and this thing will really get out of control. Thoughts, comments, reactions, Bobby?
I agree, but I'll point out two nuances to that. I do think inflation is going to continue. Nobody's stopping it. But so I'm in more of a stagflation camp. And the reason is that inflation is doing some tightening for the Fed. We see that housing starts are turning over, housing stocks are down. I've been short the credit card company banks. And so the Fed is going to be tightening in the consumer sector. In other words, the Fed is doing everything in its power for the past 2 decades to screw over the consumer and the average citizen. So the two Achilles heels and this go around is consumer credit and European credit. So I think the worst case scenario, George, is that we have inflation continuing to be at a plus 5-6% rate. Commodities, that's another whole story, even separate from the Fed, because as you say, I don't want to tie that back to the Fed because the Fed can't print oil. So I'm kind of giving you a crappy answer to your question, but I think they're given a a knee right to the groin of the consumer with higher inflation, and we're going to see it in consumer credit. But I think they will protect corporate credit at all costs.
Yeah, Bobby, you've been very consistent on that, and I agree with you 100%. I guess rather than getting caught up in terms like recession, stagflation, because that people attach meanings to those things, which kind of really miss the point. If we get a situation where inflation pressures remain elevated, possibly even intensify, and given the disparate effect it's having on very different parts of the economy, you look, for instance, at the consumer. People at the high end have never had it better, but the 40% of the ordinary folk who live paycheck to paycheck, they're getting absolutely destroyed by what's going on. So, for instance, if you look among retailers, I saw something the other day on restaurants. I was listening to a restaurant call from a major firm. I had their restaurant nerds talking about the various restaurant stocks. And if you look at the high end guys, they're killing it. But the low end guys, not so much. So it's easy to generalize. So the point I want to make is rather than say, oh, it's stagflation, oh, it's a recession, what if we just get an earnings recession that companies that are unable to pass on their prices, unable to fully pass on their price increases, take it in the form of margins? And so a consistent theme of mine has been, I'll repeat it for those you haven't heard me, you want to own price makers, not price takers. If you don't have pricing power, you got a problem. So yes, we'll get a slowdown. And you're right to point out, Bobby, the slowdown in housing. That's the most visible one, but it's slowing. It's not collapsing. And, it's not going to be enough to drag down the whole economy. Now, we may well get, and now I'm going to totally contradict myself, and I want Doomberg to wait. I don't know if he's still here, but one of the things that I'm really worried about is this thing gets completely out of hand. Food and energy prices just skyrocket, totally destroying purchasing power for consumers. And that will give us a recession. But right here, right now, in other words, commodity markets may wind up doing the work of the Fed. The Fed doesn't want that. But I think there's a chance you just get a complete freight train runaway of commodity prices on the upside. I mean, Bobby, I know you're not a commodity expert, but given what the Fed has refused to do, I mean, Paul Volcker, please call your office. I mean, what do you think the chances of the scenario I'm talking about, and what do you think it would do to fixed income markets, credit, and the economy?
I mean, I think the credit alarm is about 3 to 6 months from sounding off, as especially in high yield. It's going to take a little longer, and the consumer was going to go first. But bear in mind, I agree with you 100% that stagflation and recession and all those terms are useless to us, because we're going to have real GDP as a negative number, not nominal. So they're going to play with, they're going to point to nominal. They'll never point to real. And, that's where the pain trade is going to be.
Okay. Enough of that rant. Let's get this going a bit further. We were going to have Doomberg speak, but then he left. I gave him first shot, but he didn't answer. So hopefully he'll come back. So let's go to Mount Gox. If you're there, Mount Gox. Are you there, Mount Gox?
Yeah.
Okay. Yeah. Would you like to maybe slowly and carefully explain a little bit about the Dunning-Kruger effect? You and I have talked about it for a long time. I know you're a big proponent of it. Could you just explain a little bit to people, kind of Dunning-Kruger 101, for beginners, what that's all about, and importantly, as it applies to the market, these people who are trafficking in Cathie Wood stocks or meme stocks or whatever, and therefore the risk they're taking without even knowing it. So Matt Cox, the floor is yours.
Yeah, can you hear me all right? Because
we hear you 100%.
Okay, thank you. Just in short, so it was a famous a study in psychology where people with limited knowledge had a lot of confidence. So I pinned up top, they called it the Mount Stupid, peak of Mount Stupid. If you have very limited knowledge, let's say you've watched like 10-minute YouTube video on the economy, for instance, then you'll have very loud voices about the economy. Whereas people, like George, who's studied, thousands and thousands of hours on the economy, and if you studied that much, you know that you actually don't know that much. That's one of the things that in the end, you studied so much that you realize that you you probably don't really know what's going on, and you'll be consequently less confident in the things you say. So you might have less strong. So that particularly pertains to the meme stocks and crypto. Just to touch on crypto, like in crypto, people have Dunning-Kruger. They've seen like a 10-minute video on economics, a 10-minute video on computer science, 10-minute video on finance, and in their mind, they're like, oh, if I combine this knowledge, it's a perfect storm. Like this is it. It's crypto is the thing. And the same with the meme stocks. They go to the theater and they're like, wow, this is a good theater. Like the Coke is nice, the popcorn's good. This thing has to go up. Like people love this product, and they get fanatic and they get into these theories, conspiracy theories about what's holding the stock down, and short squeezes and all this stuff. So that was a short or comprehensive overview. But yeah, then you have
so
people
Matt,
like
so you worried? It's really particularly dangerous because you've had all these new investors come on the market, and all they really know is the market conditions of the last 5 or 10 years, and it's sort of like it's your moral. You're entitled to have the market go up all the time, and in particular, not just the market, but the kinds of stocks they're buying. They pay no attention to valuation. They chase memes. They chase narratives. And then and then the thing maybe you could talk more about, because you and I have been caught up in more than our share of Bitcoin rooms or AMC rooms. When it goes wrong, they get angry, and they think that they're right and the market's wrong. I mean, maybe you could just share, without going too crazy, some of the horror stories, or maybe one or two of your favorite stories about the stupidity of some of the people that you've dealt with in some of these crazy rooms.
Oh, I talk with Bitcoin maximalists all the time in these spaces, and it's shockingly how little they know about how the world works. Economics, finance, computer science, and if they know something, they're usually like they only know computer science. So they know that like the algorithm works and all this stuff, but they don't know economics. They don't know finance. So they just kind of they drink the Kool-Aid and they're like, oh, sound money, all this stuff. Inflation's bad, and all this the Austrian school of economics. Basically, they drink that Kool-Aid, but they can't explain why. Why is it bad? Like, what's the underlying factors making it a bad investment or good investment? They can't explain that, and I've very rarely heard anyone in these rooms or the Bitcoin rooms.
By
The
the way,
same with the meme
Matt,
stocks. The same with the meme stocks. You have this Three Aces come in who's like a mining specialist, and he tells the truth about AMC getting into a mine, and they go crazy because they know that he knows, and they're just like they're personally offended that he would dare to say something that could make their stock go down.
Thank you for that, Mount Cox. By the way, I posted something, which I posted before, and I'll post some other information in this area, but I got a lot of approval of a tweet I put out earlier this morning about logical fallacies, 15 different logical fallacies that people commonly employ. We can talk about that later in this room, but I urge everyone to look at that list. Most of them you'll know explicitly, some you won't, you'll know implicitly, but I really urge you to keep that list in mind, review it, and anytime you hear some BS doesn't sound right being thrown at you or uttered in a Twitter room, call them out on it. I mean, I don't want to dig it up, but we had this really unfortunate incident the other day, Matt Cox referred to it, where Three Aces was buried by some people very unfairly for exactly the reason he cited. Three Aces was trying to help the people in the AMC room by giving his best judgment on this crazy gold mine that AMC had bought. And rather than being appreciative of what his input, and they can disagree with him, that's fine. The next thing you know, they're trying to dox him, they're trying to bury him, and they're engaging in ad hominem character assassination, making false claims about him. And when the accusers were asked to be specific, and one of them even came in the room, And they said, well, you know, three aces had tried to squeeze money out of this guy, that guy, this guy. And so I tried to be this sort of fair adjudicator or judge to the whole thing. I said, okay, well, one, could you please tell us your name? He wouldn't answer. And then more importantly, when you said, well, could you please give us one example, like just one person who's come forward, who's possibly been the victim of some scheme by three aces, who's been approached by three aces. Could you name just one? Well, you know, I've heard this person, I didn't give me permission to talk, blah, 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 blah. I mean, here it is. Three aces is having his integrity attacked vaguely and anonymously. People tweeting out stuff about him. And then when confronted, the accusers, you know, had nothing to say. Lights on, nobody home. I mean, do people have no morality, no ethics whatsoever? I don't want to go down that rabbit hole too much today, but just to mention it in passing. I mean, it's just outrageous what goes on Twitter. So yes, people are entitled to say what they want. They can say it anonymously, as you can on Twitter. But what they forget is that incumbent upon you is the obligation, the moral obligation, to speak the truth and
Yeah,
to not talk and to not talk crap about people. Go ahead, Matt Cox.
they accused him of some pretty serious crimes, and I've done that before to other people, but I've always had data to back it up. Like if I accuse someone of something, you know, some high level crime, like I'll have data. Like I'm not just taking that out of, you know, my rear end or something. So they didn't have any data, and that was Dunning-Kruger effect. Like you saw that they had very limited knowledge about mines and, you know, probably.
Yeah, totally, Matt Cox. I mean, Matt Cox, imagine if I came on and I'm tweeting out about you. I'm like, you know what? You're a pedophile. You've assaulted women. You're a drug dealer. You've been stealing money from your customers. Blah, 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 blah. Okay, those are some pretty outrageous things to say. And then, so someone says, all right, we have to stop this. We have to settle this. So Bobby J says, I know Matt Cox. He's a friend of mine. He's a good man. So you know what? Let's have a sort of the court of public opinion. Bobby J is going to host a room. You're going to appear, and the accuser appears. And this is what I tried to do for three aces. So you appear, and I appear. I'm the accuser. And then Bobby J says to me, okay, what's your real name? And I don't say my real name. And it's like Bobby J says, okay, well, you know, you're saying some pretty serious stuff about this guy. Could you please give us some examples? Well, I don't know. I've heard, this guy told me, there's rumors, I read a tweet on the internet, yada, 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 yada. I mean, seriously. Seriously. And I don't know if the people doing this, I think in some cases, probably in most cases, it was done with malicious intent for the reason you cited, because three aces had been in an AMC room a few days earlier. They didn't like what he had to say about the gold mining company. But that may also be accompanied with total ignorance on the part of some of these people. Their either lack of education or lack of ethics to be able to say such stuff. It's just not the way I come from. I don't think any person of good conscience would ever think of saying such a thing. But that's what these AMC apes did. And I'm just not going to put up with it. Bobby J, you want to say something?
Yeah, thank you. I mean, I'm glad you stepped in to do that. And by the way, happens in real life all the time. I was in a position of doing that with a very big and powerful group called the Short Hills Little League, and they were out to lynch a couple of the coaches, and I did the same thing. People signed petitions, and one of them was a Goldman partner who signed a petition. Called him up, Dave. Did you see this happen? No. Why did you sign the petition? Well, somebody asked me to. I mean, I'm glad you did that and people should take heed that um, you know, it's just very disappointing that that could happen.
Thank you for that, Bobby. And I would ask everybody in the room, and just, I think 350 people here, if you see something like this happening on Twitter, call it out. I mean, because it's just, I mean, the answer is not censoring people on Twitter. I mean, we all cherish the ability to have free speech, and I'm a fierce proponent of that. But with that comes an incumbent responsibility that you speak the truth. And that's what these unruly hooligans don't seem to understand or respect. So anyway, I don't want to go down that rabbit hole much further. So let's go to Weimar and then YS. Weimar, what's up?
Hi, my real name is Simon, so that you don't think that I'm another bit or shit coiner with an opinion. Well, I'm listening and I recognize a lot of it. I don't know much about this whole AMC thing, so I won't give comments on it. But I'm interested in a bigger picture of this, because it's not just this. I saw some tweets from Doomberg about it, but I have no opinion about it. But I really don't know shit about it. So I just keep keep out of that territory. But what I can see is two things. Well, I've been 30 years in the market, okay, and I think there are more of us. And to us, we try to explore. We try to see different views on things. We don't want to. We try to be less wrong. You know what I mean? Less wrong. And then you have, if you look to how leveraged retailers are, I take this with me, in my mind. Sorry, my English is not that good. I have this in the back of my head when I see retailers, going ape, because they're way too leveraged. And there's another category which, maybe don't have any position at all. They're just just old slave shit. This is the internet. And I think you can judge people, especially if you've been 30 years around, who's bullshitter and who's not. But the problem is this is Twitter. That was what I had to say.
I appreciate those comments. By the way, Weimar, are you Dutch by chance?
Yeah.
Yeah. No, just because
the choking sounds.
I have many Dutch friends. I've been investing in the Netherlands since the mid '80s. I can hear it loud and clear. If you said no Dutch, then I was going to say you're Danish, but it sounded Dutch to me.
Okay. Well, thank you.
By the way, are you in the Netherlands? By the way.
Sorry, what did you say?
Are you in Holland right now? Are you in Holland right now?
Yeah, I'm in Holland.
Good.
Yeah.
Could you just share with us? We're going in a different direction now with this question, but
yeah,
you sound like a smart guy. I'm just curious your input, especially probably since most of the people in this room are from North America. Could you just give us a little bit of insight of what's happening to energy prices in your country, whether you buy gasoline at the gas station or your electricity bill, and then what is the attitude of the government, and then also, are the people starting to get angry about this? So just give us maybe a few minutes about what's going on with energy in your country. Thank you.
Yeah, I find it so interesting to watch the exact same thing across the aisle as well. So that this resonates with me also the other way around. Well, let me in Europe, government is pretty big. There's a lot of government spending, welfare state. So we are used to have to pay high taxes on oil at the pump. So if we talk just at the pump, that's of course a totally different world than the energy world. But okay, at the pump, we are used to high prices. I think, and we are, price takers. You have Shell. You had Shell, but ESG fucked it all up. Sorry if I put it like that. And well, yeah, I'm really like cringing how I see Biden. I don't want to disrespect any of your politicians. I think all politicians are equally bad to begin with, but I see Biden, going to shopping with Venezuela, Iran, Saudi Arabia. Saudi Arabia is pissed because it tries to make a deal with the nuclear deal with the United States. These, this is the Middle East nest, the hornet's nest. But we are in different position. So we always had high prices. I think what personally the problem with us is now, and I think many don't see it yet. You have seen these prices go up more faster. So and there's also a difference in Holland, for example. I can just only speak for my country. I think I'm not knowledgeable enough about the whole of Europe, but in my country, it's a highly dense population. It's very dense. People live very short distance to each other. So it's like India. They're the second densest populations in the world. It's a very tiny land I live on. So it's it's insignificant in the world. If you don't know where Holland lies, I can understand. It's like a breadcrumb somewhere in Europe. It's a good economy. People, we have a lot of mistakes. We have way too high mortgages. There are a lot of things you can complain about, but there's one thing why I think it also hurts us less. And it's because we have a fairly big middle class. If you look to the history of how the middle classes changed, then ours is one of the least to be affected. It is affected, because of all kinds of dynamics that also plague other countries. Only it plagued much less so. So I think that too is one bit of an explanation that's not the. But you hear people about the prices, but there, there's no civil war coming.
So Weimar, let me ask you a question. Yeah, Weimar, let me ask you a question.
Yeah.
So, how much, just ballpark, how much when you go to buy gas at the gasoline station, petrol, whatever you call it? So, two questions. One, how much has petrol gone up? And I realize in Europe maybe it didn't go up as much because the taxes are such a high percentage of the price.
Yeah.
That maybe the percentage increase in the total price is not so much. For two questions. One, how much has gasoline gone up at the pump? And then two, what is happening, say, to your power bill for your home, whether it's electricity or natural gas or oil?
Okay, well, if I only talk about my situation, I'm pretty much not so much affected. But it also has to do with that I live well within my means. That because I want to put my money at work. So I live very economically.
But right. For instance, do you have a car? Do you own a car?
But I will say what it means. Price has gone up. Maybe. Yeah, we have different measures. You have gallons, and we have liters. So sorry, I am not that good. I can make a translation. But
in Denmark, it's up 100% in 1 year.
Anyway, so wait, hold on. Weimar, hold on for 1 second. I'm going to mute you. Mute yourself. So, Mount Cox, if you go to buy gasoline at the pump, how much at the pump have gasoline prices gone up, Mount Cox?
About 100%.
Okay, and for the average Dane, their heating bill, whether it's natural gas, oil, whatever it is, electricity, nuclear, how much have electricity bills increased, Mount Cox?
It's about the same on all those three. It's like 100% on 1 year. And
okay,
that's the situation.
Okay, all right, okay, that's helpful. So hold on 1 second here. So Weimar, you can unmute yourself. Mount Cox said 100% in Denmark. What would you say in the Netherlands, Weimar? Weimar? I don't know where he is. Okay. All right. So 100% Mount Cox. Wow. And so Mount Cox, let me ask you. The Danes are pretty mellow. Are they? How, if at all, is the public conversation changing in Denmark about all this green stupidity and the fact that the power prices are up so much, the energy prices have increased so much? Is the conversation changing? Is the conversation changing?
Even before Ukraine got invaded, Parliament was talking about giving 300,000 households $500 to cope with the heating bill. And that was pretty much going to get passed before the crisis. And then you had Ukraine on top, and oil kept going up. So that was in December of last year. They started talking about that. So then Ukraine happened. I'm like, I mean, they might do it like 1,000. Like, I wouldn't be surprised if low-income Danish households received $1,000 for their heating bill, like a helicopter payment.
Right. So this is when we talked before, about emergence of more fiscal policy. Yesterday there was talk in the room, about there was discussion about universal basic income. It's all the same thing. It's all fiscal stimulus being used to offset the impact of higher energy prices. But let me ask you a slightly different question, Matt Cox. Is anyone in Denmark starting to rethink that maybe this whole green thing is nuts? Like maybe we need to have nuclear or natural gas, or are people got their head up their ass so much on the green thing that they still are drinking the Kool-Aid about the need for all
they're
green?
still drinking the Kool-Aid. Unfortunately, we're not there yet where, they probably have to go through this period where they're trying to transition away from oil completely. So they're trying to go full electric. Like we had Maersk, the biggest shipping company in the world, that's a Danish company. They divested all their oil like 10 years ago. Then you have something called Dong Energy. They also divested all their oil. So Denmark has divested their oil many years ago, and they're trying to go on this green transition, but they don't realize that they are causing the price to go up.
Yeah, and Matt Cox, what's crazy, even in Germany now, where there were plans to decommission yet all the remaining nuclear plants, nothing that's happened so far has discouraged them from changing their paths. I mean, to me, it looks like full-blown economic suicide.
It's also because the politicians you have, they're not, economic experts. Like they have experts telling them stuff, but they have to be told this shit. They can't figure it out. Like they're not like people in this room that can put two and two together.
I get it. Okay, so hold it, Mount Cox. So Weimar, could you answer the same questions as at Mount Cox? He said gasoline prices and electricity bills basically up 100% over the last year. Could you answer that question? Maybe not for yourself, but more generally for a Dutch person. What does it look like in the Netherlands, please?
Well, it's fine if you call me Weimar, but I'm Simon. But that no problem. Thank you for.
No, I'd rather call you Simon. I just forgot your name. Go ahead.
Yeah, no problem. Actually, the energy bills are way higher than 100%. I will give you for an example. I took a 4-year fixed contract, so it will end probably next year. But for example, you can't make any long-term contracts anymore because the prices go so bananas that there's no energy contractor that wants to, have fixed contracts anymore. So that's one. Two, how much? Well, I would say 300%. And with
hold on. Just repeat that. Do you mean electricity prices are up 300%? Is that what you said?
Yeah, gas and electricity. Yeah, the whole bill. Yeah, 300%. So people who used to pay €200 now have €600. I'm not kidding.
And has this become a big enough issue in the public square that people are starting to talk to? What's the reaction of the populace to this?
It's well, I agree so much with the Danish guy. Sorry that I've Mount Cox. The politicians, well, what their answer, of course, is that they will monetize debt to give relief. I mean, come on. So, it's very difficult because you have always different schools of economics about what causes inflation. Is it cost push, or is it Austrian or whatever? I leave it. I don't want to go into the academics of things, but I think we all can agree that if you have a debt-trapped economy, and that whatever causes the inflation, it might be welcome to get the debt down in real terms, and so it's a problem when you are up for an election and script night.
Right. So Weimar, let me interrupt
but
you.
so we get here in Europe. The problem is, I think that less people understand how fucked up we are.
Weimar. Let me ask you. And this is both for Weimar and Mount Cox. We got the European contingent up here. Weimar, you first, and then Mount Cox. What about the attitude of the average man in the street with respect to the Ukraine? Whether they side with the Ukrainians, the Russians, the U.S., NATO. I mean, are people? I mean, I was talking to a French friend a couple weeks ago.
Huh?
And he's like, you go out for dinner in Paris, and like all the restaurants are booked. You never know there's a problem. Blah blah blah. Then I read some economic data. Surveys are collapsing. People are worried. Blah blah blah. So when you see what's going on, A, is it having an effect on the economy there? And then B, what is the attitude of the typical Dutchman towards the situation, and how do they think it's going to be resolved?
Well, I think a typical Dutchman is a bit like the typical English guy, optimistic. So we get some shit, but somehow we get our act together, and we'll deal with it. But and I also think, but maybe that's overly optimistic. But we have less politicized media. I don't say we have good media, but we have less. If I just will give you one big explanation how we are different. In the US, for example, or in UK, you have basically two parties. Okay, maybe Libertarian Party as well, but basically you have two parties. So if the one says yes, the other says no, and otherwise. That's a whole. I always make the joke: a two-party system is just one party away from a one-party system. But now I will give you the shocker. We in Holland could choose from 38 parties. We have 21 parties in parliament. 21. So that's a lot of voices. So our media, they can't say, well, okay, I'm Republic and the other is Democrat. It doesn't work with that many parties. So we have a lot of choices. So it gives not because we are so much smarter, but it gives us maybe a more multiple angle views on things. So we don't go bananas about the other guy, because there's not one other guy. There's many. And all these parties have to wheel and deal with each other, so they can't throw mud at each other, because they have to make deals together, because no one has one majority, and this is complete. It will look like a bureaucratic tea party, but somehow it functions and somehow it doesn't. So it's a totally different political landscape, and it means that we have a different media culture. There's most Dutch, don't trust media. So that sense, it is not different, but that's not because there is politicization. It's more because there's propaganda. The government, we have state television, and I haven't watched television for 9 years. I get my sources everywhere else. I just pay for good journalism, but I think we are not outraged. We also have less wokeism. Sure, we have wokeism, but it's not. We have a lot of. We have different divisions. I think we are mostly divided by COVID policies, and but it's not so deep.
Right. Yeah. So Weimar,
we're not that fucked up yet.
Yeah. No, Weimar, I appreciate that. I want to get the view from Denmark. I want Mount Cox to weigh in, but just one thing.
Yes.
It sounds like Simon, your 2 cents sitting from where you are, and you pay attention to what goes on in the States. You think it's the fact that we have this two-party system where both sides are so entrenched. If you were just to say, if you could redesign the U.S. political system, you think we need another party? Is that what you?
Yeah. What I think would be best if and maybe this is very political to say, but if the constitution is more paid more honor to, because we have a very nice constitution as it was, and maybe there are things that are difficult, but well, that's nothing is simple. But I think it would be a great a great improvement if Americans, for example, if you think if you have opinions which won't fit one party, and I think many, some people maybe they're born like I'm a Democrat and my dad was a Democrat, and I understand it. But if you have people who think for themselves and just think about all the complex societal issues, that they may have opinions which won't fit in one party. And if you just have two parties, then you have to cram a lot of stuff you're not really sign in for in.
Yeah, no, I know it's a really good point. So stay on stage, Weimars. Hold that. So
Yeah.
Matt Cox, going back to the question. The question was, what's going on with Ukraine and Russia? And I asked Simon for the Dutch view. Now I'm going to ask you for the Danish view. How who? I've been surprised I've been surprised quite frankly going back a few weeks ago.
So there's
Yeah, sorry, you go ahead. Go ahead, Matt Cox. Go.
the people I speak with, they don't know what to trust because there's so much disinformation on both sides. Everything on Twitter is seems like it being manipulated. So it's hard to know what data to trust that's being shared on Twitter. But definitely, it doesn't seem that anyone I know supported the invasion. Like they either support Ukraine or they're just very critical. Like I'm kind of cynical in nature, so everything I see, I'm kind of like, is that really true? Like, is that picture of a Nazi, not Nazi Ukrainian, is that real? Like stuff like that.
And what about how do people in Denmark view the United States and NATO's involvement in this whole thing?
I don't think there's really any view on that in relation to Ukraine and Russia. They're more kind of paranoid that a nuke might come over, like Putin.
Right. Okay. So let me ask the question a different way. Sorry, different question. Before this all happened, what was the Danish attitude towards Russia, and how has that changed?
I mean, the educated people, or like, I know a guy who did study abroad in Russia, and no offense to anyone here if they're Russian, but he explained it like the Russian culture. It's like you try and see who can out alpha each other, like who can out scam each other. And Putin is just the top guy. Like he's the best one to swindle the rest. Like that's how my friend who actually kind of likes Russia, that's how he described the whole culture. I'm sorry if I offended someone that's Russian in the audience, and please correct me, but that's kind of the general gist of the Russian mentality.
I appreciate that. All right, let's move on. And please, if you have a question, I see
I
a
have
lot
a
of
question, George. Is it okay?
Yeah. Bobby
Yep.
J, what's up? Yep.
For our European friends, how many refugees do you think Europe will realistically assimilate, and how many will they have to turn back?
My niece is in her school. They're getting one Ukrainian in each class, so she's going to go and collect a Ukrainian tomorrow. That's going to start in school on Monday. So they're getting at least in that town. We're getting a lot of Ukrainians in the school system right now.
No, but I mean, is there going to be 10 million coming in, 15 million, 20 million?
I mean, Bobby J, it's
I
a
hope
tough
not.
question. Yeah, so hold on one second. I think they've been talking about what? There's like 3 or 3.5 million refugees so far. So I guess the question is, Mount Cox, do you think the Europeans, and Denmark's a small place, so maybe you want to speak for Europe as a whole, but do you think the Danes, and for that matter, Europe writ large, is going to take in a lot of refugees? I think that's the gist of Bob's question.
It's in Europe. Sweden has always had the view of being like open for everyone, so they've taken everyone in for many years, and they kind of view the Danes as kind of Nazi in a way because we're kind of close with our borders. We don't really like letting too many people in, so they view us as Nazis. Like, but we'll take some, but we won't, open the floodgates. That won't happen in Denmark or Norway.
Thanks for that. All right, let's bring some others into the conversation. I haven't spoken yet. and anyone else who's in the audience who wants to speak, I see a lot of friends there. Raise your hand. I'd love to have you up. The more the merrier. So we're going to go to my good friend Gilberto first, and then we're going to do YS. Gilberto, good to see you. What's up?
Hey George, you want to hear something that can teach a lesson to the United States from the Dominican Republic?
Yes, please.
So, 2003, Dominican Republic, we had a bank crisis. Our internal debt went 2x. What happened was the International Monetary Fund came to the Dominican Republic and gave us the receipt for high inflation. Basically, the Dominican peso pushes power plummeted less than half, and oil, gasoline, food prices skyrocket. The supermarkets were called House of Terror, and the economic activity just ceases to exist. What happened to the psychology of the population was that people didn't trust about what was going to happen in the short-term future. So they lay off workers, people lost their job, and the interest rates went to 40%. The dollar went to it when it begins. We had $1 for 25 pesos, and it went to 60 pesos for $1. What United States can learn about what happened to the Dominican Republic is that what they can expect in terms of pushing power of the people that works in the low and middle class is that they are going to go like in hibernation. They're gonna go they're gonna cease to try to start new jobs, start new enterprise, start new businesses. And when you start to see the food price, and the trigger was food prices, was not gasoline, because people, uh, there's many ways to get to their jobs, and now on with the digital environment and work from home, I don't think that it's going to be the oil prices that it's gonna break the economic system. It's gonna be the food prices. And whenever you start to see the food prices taking more uh, a bigger stake in the consumers spending monthly payment allowances, that's the best signal to start like watching to jobs creation, because people will prioritize low spending and in new employees versus staying like in a hibernation state until everything goes through. Fast forward 2 years after that recipe came in, Dominican Republic recovered and started to grow at an 8% yearly rate, and they call it the Dominican miracle. I don't call it miracle. I know that what happened was that rate when they take the interest rates to 40%, people just took all their money and put it in central bank bonds, and that's when the economic ceased to hyperinflate. And what I am seeing in the United States is the beginning of that process. And that's the lesson I can share with you.
Gilberto, that was brilliant. Totally brilliant. So let me ask you, even though you're in the Dominican Republic, and I think the story you tell is very relevant, from where you sit, do you think the United States is going to go down that road? In other words, again, like Bobby J says, watch the hips, watch what they say, not what they do. And the longer the Fed, J Powell's a man without a plan. They're still growing the money supply by whatever. They have no plan. It's all crisis management. And the commodity markets are speaking with their feet. And so from where you sit, given that we're not taking the medicine, and again, and you're very modest, but your comments have been so on point the last few months that we've known each other. From where you sit, what's your best guess looking at the way things are playing out in the U.S.? I mean, at the top of the program, I explained, I think, prices are going to continue to skyrocket, and The one thing we're not going to get, you look up to the title of the room, Goldilocks is missing in action. Okay, there's an APBF for Goldilocks. Goldilocks is dead, dead. You're either going to have runaway inflation, or the only way it's going to be cured is we get a recession. Flip a coin, take what you want. It ain't good for stocks either way. What's your own opinion?
Well, the differentiation, the thing that difference Dominican Republic from, of course, many things different Dominican Republic from the United States. But what I think is going to play differently is that when emerging markets feel the pressure of inflation, they buy dollars to hedge themselves, and the demand for dollars around the world is going to skyrocket in the same way than the products go higher. So what I think is going to happen is a delay effect of of what I have portrayed. United States is gonna have some kind of what I just told, but it will be not only slower, it will be maybe not slow is not the right way to portray it. It's gonna be bumpiest because we fell it like in a straight line. And what I think it's going to happen is that the demand for dollars will keep rising through this period, and that will make like that will play a situation on the global companies of the United States that they will lose purchasing power from
Right.
the global population that will not afford to buy those products
All right.
from
All
the
right.
United States.
All right. So Gilbert, just hold on for 1 second. You are the smartest guy in the room. I'd like to have the Chart Life come up here if he can. I don't know if he's in a place he can talk, but the Chart Life, John Roque, one of the best technicians on the street, a great thinker as well. I just participated in his weekly webinar yesterday, and again, he was reinforcing his call on higher interest rates and higher commodity prices. So if we have rising yields, rising commodity prices, and we get a rising dollar, I mean, oh my God. I mean, last time I checked, those are all negatives for the stock market in a huge way. And, I'm very bearish, and I think people are just missing the macro, which is going to just totally blindside people. I mean, listen, markets go from one thing to the other. They often can't focus on more than one thing at a time. One day it's Apple's earnings, the next day it's Russia, the day after that it's the dollar, the day after that it's the oil price. And there's this huge hurricane that's been developing. When I just a tsunami, where I just think people don't fully appreciate what's going on. I thank you for those comments, Gilbert. Please stay up there. I want Weimar as a quick follow up, and then we're going to go to YS. Weimar, do you want to say something?
Well, I want to thank for the insights of this guy from the Dominican Republic, because well, if you have maybe you have listened to Luke Groman, his Force from the Trees company.
I'm sorry, Simon.
Yeah?
Who, Simon? Who are you referring to? We listened to whom? I'm sorry.
I was Luke Groman. I listened to.
Oh yes, Luke Groman. Yes. Okay.
Yeah.
Go ahead. Yep.
And well, he's from the company Force from the Trees, and his approach is basically in line with what this guy from the Dominican Republic says, because what he basically says is that it gets misdiagnosed what our problems are, because our problems are now more fiat currency related, which aren't very well known to the U.S. But
yeah. Luke, Simon, if I may interrupt, I read something. I don't know if it was from him or somebody else. I read so much stuff I can't remember.
Yeah,
maybe it was Jesse Felder. Hold on. Maybe it was Jesse Felder. I can't remember where I read it. Someone was making the point, and maybe you want to respond to this, Weimar, or maybe Gilberto, you want to come back on this. But the idea that the U.S. economy is starting to look more and more like an emerging market economy.
Yes, that's his idea, and well, it's very easy for people to say it will go this way or that way, and it's very hard to listen to people who say, I see probability that we get on that path, and then the Fed will respond and politicians will respond, which typically economists never get, because economists always think from theories, and if you look back to financial history, it will inform you that politicians do stupid things that never work, but they do it anyway because it somehow serves their getting elected. So I see all kinds of things that might happen that make it go in another way. But on the long term, I agree with this path. But I can't say, I'm 100% sure, but I can never say this. So, but I think what Luke Groman gets right. But I also see bond guys, saying, yeah, where's the inflation coming from? I don't see it. Yeah, you saw, then you get monetarist view, you saw the aggregates going zoom, sky high, and now we have inflation. That's one way to look at it. The other says, well, and that's Luke's point, but there are still people saying, I don't see it, which is that the true interest expenses of the US is now going up, and the tax innings is going to decline, and that the difference, which used to be borrowed, which costs the US to go from beneath 100% debt to GDP to 130% of the debt to GDP, which is called a debt trap. And now that there is this, they don't borrow the difference anymore between the gap between true interest expenses and the tax innings, but now they print it. They debt monetize it, to be more precise. So that's Luke Groman's perspective, and there is a seed for this kind of emerging market way in managing money, namely that you don't have many options and only have hard choices left. Well, I think if you can see it right now, you can see it happening, because the problem is that hard choices are refused, and hard choices.
Weimar, 100%. Yeah, no, Weimar, I want to interrupt.
Yes, of course,
the politicians will never make hard choices, and that's the way it rolls. So the markets have to act. All right, let's bring someone else in the conversation.
Yeah, of course.
YS, YS, good to see you again, my friend. What's up, YS? Are you there? YS?
Hi, George. Yes, I'm here. So a couple of comments, and I have a question for Mt. Gox. I wanted to kind of bring the conversation a little bit back towards the Dunning-Kruger effect. So first is his friend who went to Russia. It's spot on. The one thing about anyone in Eastern Europe and Russia is that the people there have been so broken and demoralized for generations that there's this DNA generational memory to be a cynical person who only operates short term. So I was always surprised coming to the West how people over here think of Putin as some kind of genius playing 4D chess. He is not. I mean, maybe in one particular narrow aspect where he's the top dog over there, yeah, maybe fine. But if he was really that smart, would Russia really, with all the endowment of resources and people, been struggling that much for the last 30, 40 years? They're completely dependent on technology from the West. They consume, all the people who make any kind of money there consume imported goods. If it wasn't for gas and oil and maybe gold and diamonds, they wouldn't have much. The demographics are terrible. This is again a reflection from their cynicism. They have one of the highest alcoholism rates. They're losing population. Anyone who's offered a visa to immigrate will probably do so. The United States can end this conflict probably by offering people who can be vetted and pass a security check visa to go to Texas or really anywhere else. So they're operating from a very weak position. And I think that's part of the motivation behind Putin acting now, because if not now, when? His choices are not great now, but they're only getting worse. So that's just an observation when it comes to that. And I think that's part of the reason why they're struggling so much with the war, because the Ukrainians are defending their own territory and they have the morale to do it. The Russians are doing that because Putin told them to. There was a story yesterday, very revealing, how a group of army men basically killed their own leader, ran them over with a tank, because they were upset about how the war has been conducted and how many of their fellow army men have been sacrificed. So that's when it comes to that. About the Dunning-Kruger, I think it's fascinating because I think our financial market currently, with giving democratized access to people, it's kind of reinventing what happened with social media. And even before that, if you think about the printing press, what happened initially when the printing press was invented, it's not that everyone all of a sudden became well educated and all this bliss and knowledge got spread out. No, it started 100-year bloody war because now everyone had an opinion, everyone could express it. There was chaos. Ultimately, that worked out great. And I think the same thing is being recreated now with AMC and GME and Bitcoin and all that through apps like Robinhood, and people feeling the need willy-nilly that the only way to stay ahead and cling on to middle class is to become an investor.
Yeah, and it's like the Dunning-Kruger effect. That was like the late '90s that came out, but it's actually, sorry, an older idea which has been there for hundreds of years. Darwin said that the more ignorant you were, the more confident you were.
No,
He said that in the
absolutely, and
1800s.
this. But let
You
me
had
ask you
people saying
this.
it for centuries. People have
No,
been
no,
saying this for centuries.
I'm not saying it's a flawed idea, but let me ask
No,
you this.
that's just an added comment. That's why.
Okay, thank you, Malgas. Let me ask you this. Well, first of all, it makes a little bit of perverse rationality, right? So the less you know, the more it kind of makes sense. The more you know, the world is complex and messy, right? So of course you're going to be more confident the fewer data points you have. 2 points make a line. 4 scattered points make nothing, right? Unless they line up nicely. So, and the other thing is that people falsify preferences. There's a good academic paper in a book by Timur Kuran, who basically was looking at the Soviet Union and the revolutions 89-90, and he was talking about people's falsified preferences. So people falsify their preferences out loud based on social pressure, and then you don't really know underneath how many people are very close to flipping a switch. And if there's some kind of social coordination mechanism, all of a sudden you see a revolution, whereas before none was apparent, right? So many people were surprised when the Berlin Wall fell, and that's exactly what happened. People were like, "Well, how did that happen?" No one realized how fragile the system was. So a lot of those Dunning-Kruger people, um, they invest in assets that are very reflexive, right? Like the stock market has been untethered from fundamentals, even more so with Bitcoin. So of course they're trying to proselytize because it's a reflexive market. The more people they can convince, the more people buy, and the higher the price. So there's a perverse rationality in them not wanting more information and actively trying to shut down information that goes against the credo, right? Because
Well,
that's
we
how
saw
they
that with Free Agents yesterday. They tried to, allege all kind of criminal stuff that he done because he said something they didn't like.
exactly. It goes to
It's like he's
character
an expert.
assassinations. It goes to character assassination, and they go to ad hominem attacks precisely for that reason. So it's their biggest strength and also their biggest weakness, right? And my question to you is, granted, some people indulge in that, but what do you think happens, or rather, people like Saylor or Novogratz uh, or the Pump, they have tweeted about what kind of scam Tether is, and yet now they're vociferous advocates of it. Are they just really excited about them potentially having bootstrapped the entire system based on that fraud, and they just want to sweep it under the rug? Or do you think they buy their own bullshit? Or what do you think? At what point do you think the leadership switches?
I think at this point they've been in it for so long that they realize it's just a part of the way the crypto markets get pumped, pretty much from thin air, and they just accept it and they don't really talk about it because it's not in their interest to do so. So that's like.
Do you think that they believe that this would just become a curiosity at the inception of this great asset?
I actually don't think they believe. I actually don't. Generally, I don't think they believe. That's my. I followed it for a while, and these guys, they seem more like, apologize to any crypto guys in here, but they're like grifters. Like they're just taking the opportunity to swindle a little and make some money.
Yeah, Matt Cox. So you and I go way back on this crypto thing. I mean, my 2 cents and just yours. I think, they're true believers. I think they were blind initially to the role Tether was playing, and then once Tether got too big, the whole Tether problem became, it's against their book, and so they just go along with it. But I guess my question to you, Matt Cox, do you think that Pomp and Novogratz and Saylor and these guys, I mean, we know they're true believers. I got that. But do you think they fully, and maybe it's a stupid question, but let me ask you anyway, do you think they fully understand or believe that Tether is a huge problem, and they just don't want to say anything about it? Or do you think they're so drunk on the Kool-Aid
Novogratz definitely knows,
he
because
knows? Yeah.
he was the guy who caused Tether to break its peg to like 70 cents, because that was the end of 2018. There was like a lot of Tether, quote unquote, FUD. And he was like, oh shit, I'm holding a lot of this Tether stuff. And he just market sold the whole thing. Like, that was what Novogratz did in late 2018. So he definitely knows.
So
You see Pompey.
so he's in on the scam basically. He fully knows.
Yeah,
fully
I mean,
knows.
yeah. But here's the thing. These other stablecoins have seen Tether get away with it for so long that they're starting to do the same things.
Well, I know, and maybe there's some. I see. I don't want to mention names, but I see. I have a lot of friends in the room, and there are a few in the room who, I don't want to out them or dox them, but I hope they volunteer to come up and talk on this. But you're talking about monkey see, monkey do. You have one scam stable coin, Tether, and then you got Circle and all the rest of them, right? It's sort of like,
Yeah, Luna now. You have UST.
Hold on. Let me beat around the bush. Okay? It's sort of like fucking Elon Musk. Okay, the guy lies through his teeth, makes up shit about the order books, blah 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 blah. We don't have to go relive greatest hits of Elon Musk. And the next thing you know, you got Elon Musk Jr. You got Trevor Milton with Nikolai. You got the Lordstown assholes. You got Rivian. All these guys. And that what I mean. And that's the real problem of what's going on, because the rules and regulations aren't enforced. It's monkey see, monkey do, and the whole system is compromised. And it's Charlie Munger, please call your office. You show me the incentives, I'll show you the outcomes. Because Elon Musk is never held to account. He's got a lot of offspring now, and it's happening all up and down the waterfront in equity markets. I mean, it's like a fucking cancer. All right, here he is. I'm going to let him introduce himself. We have Diogenes here, who's forgotten more about this I'll never know. Mr. Diogenes, good to see you. I'll let you introduce yourself as you wish, and the floor is yours.
I just needed to wait till a second cup of coffee, George. I just want to make one comment, and then I'll get off, and I'm enjoying this. And that is, keep in mind, you just mentioned a couple of people like the Lordstown guys and Trevor Milton and Nicola versus Elon Musk and some of the crypto issues. But one of the things I teach in my fraud course is the fact that asset prices themselves are the best defense attorney and the most vigorous prosecutor. And that often the fraud is not prosecuted or even discovered until people start losing money in either the security or an asset class. And that goes back to the 1680s. It is as old as financial markets. When people are making money, all of this stuff is generally overlooked. Stock price, again, is about 300 years old. And it isn't until that really people begin to look at their files and understand why we're in this, we're losing our money. And then when the obvious illegality comes back up to the fore, they scream politically to the authorities to do something. And it's as old as I said, as the markets. The fraud cycle follows the financial cycle with a leg. I'm going to hop off.
Can I ask one follow-up before you run? Where are we in that cycle right now? Are we in the 7th inning, 8th inning, or an extra innings, or you have no clue?
I don't know if it's a baseball game, a soccer match, or a football game. Look, we've already had some revelations, right? We've had some revelations along the way. Some of the Wirecard, Valiant, certainly Theranos in the private sector. These have been, but there were signposts as well before the last wave of fraud in the late 90s. We saw various different things get exposed and prosecuted before the biggies of Enron, WorldCom, Tyco, etc., which was really the last wave of corporate fraud. We had wholesale credit market fraud in the GFC. But in terms of the type of fraud I think you're talking about or referring to here with an asset class like crypto and individual stocks, I suspect we're late in the game. How about that?
Last thing, because you and I dialogued a while back already about Tether, going back to the second quarter of last year. based on your sources, not you have any inside information, but do you? I mean, I'm hopeful that Gary Gensler will freaking do something about this. I've been disturbed that it's taken so long. Do you think it's regulatory capture on steroids, or do you think just be patient? These things take time.
I couldn't tell you. I mean, I have no idea inside what's going on inside the SEC. This does seem to be an SEC that is a little bit more activist and a little bit more awake than, shall we say, the last 12 years, where it was just asleep at the switch. I will say that. And so, I think some of it's misguided. Obviously, the political pressure to go after short sellers, for example, talking my own book, but is pretty silly. But I do think that they are responsive to this, and I suspect that any kind of major decline in the markets that lasts more than a few weeks or a few months is going to increase a lot of the enforcement stuff. But look, the most obvious, and I've been saying this for a long time, the most obvious amount of corporate fraud is happening in plain sight, is the aggressive use of pro forma metrics by corporations now to present their results. Whether you're a DraftKings, whether you're a Tesla, whatever you are, the use of adjusted numbers has just gone crazy. Take a look at Block, the former Square. I mean, they're supposed to earn $1.20 this year. Well, they're actually on a GAAP basis going to lose money. And so we have an awful lot of that happening in the marketplace now, where fundamentally structurally unprofitable companies are routinely presenting themselves as profitable in all things other than their SEC filings. And I think yep, go ahead.
One last question. I mean, you're very generous with your time. Hopefully you'll come back. But are we also not in a place now where this sort of Rube Goldbergian perpetual money machine, that prices are not relentlessly advancing from the lower left to the upper right, that the sort of reflexive nature of things, whereby everyone lives the lie, wash, rinse, repeat, no good, no harm, no foul, it's all safe sex. That the inherently unprofitable nature of these companies now really becomes a thing, because all of a sudden the stock options aren't worth what they were before. Blah, 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 blah. And then to take it even further, I'm going to jam as many things as I can into this question. When you look at things like SoftBank, where, left-hand side of the balance sheet's a bunch of unprofitable garbage with Alibaba and ARM thrown in, and the right-hand side of the balance sheet's a bunch of debt and equity, and now all of a sudden SoftBank's looking inwards because, wait a second, I mean, Masa-san is the Aubrey McClendon of this cycle, all right? But do you think, I guess the question I'm getting at, and you can answer any part of this or reframe the question as you wish, that the sort of fake it till you make it aspect of this is seemingly the water's draining out of the bathtub, that this thing may collapse on itself?
Well, I'll just add one other factor that people kind of forget, and what kind of ended, and I think the meme stock, my own view is the meme stock run of last January, and then there was an echo again in May, June, and then even a third echo in October, and then now we've had another one, and each of them are a little bit less frothy. But the thing that really ended all of this from a I would say basically either rate of change or breadth point of view was supply. In February of last year, we had $3 billion a night of SPACs being funded. That was equivalent to the 100% of the entire U.S. savings rate in February of 2021 was going into SPACs, and of course massive IPOs. Bloomberg's telling us that they're getting ready to gear that up with this last rally. Couple that with secondaries and all of the share-based comp that tech execs have gotten in the last 3 years. I suspect that the markets themselves are going to kind of work, and that in the junk that's rallying, people aren't going to wait as long as they did before to register more shares or do more secondaries or bring more IPOs. That's the way it's always been.
Hey, Jim, you and I are both old enough to remember when, March of 2000, where were you? Morgan Stanley Tech and Telco Conference in Manhattan. I mean, it's always supply that does it. It's always freaking supply. And so I think you're right. 100% right.
No, thanks, George. But again, usually it is supply that gets these things finally, and no amount of meme stock thing or whatever can offset the fact that a GameStop does $1.6 billion offering. or whatever. I mean, if these people want to buy the paper, the one thing I know is that Wall Street will supply it to them.
Perfect. Hey Jim, we'll let you. I hope you had enough caffeine. I hope you come back. This has been great. I just want to let you know I'm looking at this at my phone. And I just see a sea of bubbles and stars and hearts popping up. So anytime you feel so inclined, maybe you had a glass, one too many, a glass of wine at night or a beer or whatever, feel like mouthing off, you're always welcome here, my friend. Appreciate it.
All right, thanks, George. Have a good weekend, everybody.
Perfect.
Hey,
Thank
George, can I ask him a question? Just one follow up.
If he's staying in the room, that's great. I don't know how long Diogenes wants to hang around, but go for it.
Yeah, I'm still here.
Oh, so I'm not a finance guy. I'm just a retail guy that just invests. But I work in the industrial manufacturing world, and the thing with Nikola.
Sterling, let me jump in. So I'm not doxing you. You said this publicly. Diogenes Sterling works at Parker Hannifin, just so you know. So he's exposed to a lot of the industries that you hold near and dear to your heart, including solar and everything else. So Sterling, go for it.
Thanks, George. The one thing I was going to mention is coming up in May 5th through the 9th in Long Beach is the ACT Expo. It's basically the clean energy show for transportation, battery, electric, and hydrogen. There's Nikola's president is actually speaking at that. There's a ton of folks in the industry that's already very upset that they're presenting. So you're going to have a bunch of engineers that are just going to pick apart their technology. So if you want to take a look at it from an investment, I would key in on that show, because either their technology is going to either work or it's not, and they're going to be there. There's an hour of he's presenting. He's a keynote speaker, but then there's also a question period. So I just wanted to point that out.
Okay, great, thanks.
Yes. Hey, Sterling, let me ask you a question, and I don't think any of our solar mavens are in the room, but I wish Gordon Johnson were here. He's always good for a barrel of laughs. Sterling, from where you sit, looking at all the solar nonsense and all the clean energy crap, I mean, what are you seeing from your standpoint? Like, a couple of things. One, what are you seeing in the alternative energy generally? And then two, more importantly, maybe more interestingly, what I think would be really helpful to the room, your company is exposed to a lot of industries across a lot of geographies. And increasingly, we're having supply chain problems. It's not just about things stuck on container ships in the middle of the ocean. It's about, all of a sudden, like who knew the Ukraine supplied 50% of the neon in the world? Like, who knew, right? Whether it's true or not, I don't know. But in a world that's been optimized for, globalized supply chains, and where you're now, the tide's kind of going out on that, where we're deglobalizing, or what you will, or maybe in certain markets where commodities being weaponized, this, that, whatever. Toyota, I think there's 30,000 parts that goes into Toyota. So if you can't get one of those pieces, you got a problem. So from where you sit, Sterling, since you cut across geographies, across industries, what are you seeing in this regard in terms of potential for disruption to add a certain amount of economic uncertainty into the world economy in a way we've never seen before? Sterling?
So, George, this neon gas, I don't think a lot of people really saw that coming. I know last 2 weeks I've learned more about neon gas and trying to find alternatives, but
oh no. Now we're all going to become armchair neon experts.
No,
Go for it, Sterling.
So, but that's where you're getting to, because the importance of the neon gas to the semicon industry, yes, it's been there, but nobody realized, like you said, how much of that is being supported by Ukraine, and that's not something that at the moment there's not a lot of people that have figured out how to find alternates for the neon to be able to be used in a lot of these semicon applications where you have tried and true policies and procedures that you're just not going to introduce something to just as a substitute. And I think that's the part right now where semicon industries will there's a thing called they'll accept the substitute product if you can prove fit, form, and function, and stuff doesn't change. However, when you're dealing with a gas, that doesn't necessarily mean it's the same thing as a component or things like that. So I would keep an eye on that. I know I am, from investment, because I'm into a lot of semicon stocks. The Applieds and the Lams of the world A lot of their equipment is where a lot of the neon gases are used, as well as the foundries.
Yeah, Sterling, let me ask more generally. Could you speak to companies' activity with respect to raising prices? Because I mean, I read the Evercore ISI stuff every week, and they got this survey in there, which it's not, are you raising prices? It's a more interesting question, which is, how do you feel about your ability to raise prices? And for 30 years, that was an irrelevant question. Now it's off the charts. I mean, companies basically feel and have an ability to raise prices, writ large, and it's all being passed through. Now, obviously, you want to be a price taker, not a price. You want to be a price maker, not a price taker. So, could you? And if you're not, you have problems, with margins. So, what are you seeing with respect to pricing? Whether you want to talk about your customers or you want to talk about Parker Hannifin, or if you don't, you want to talk about your competitors. But could you speak to the pricing environment, and also what you perceive to be the ability of your customers to be able to pass on higher prices?
So, George, they're not. We're all pretty much doing it. They're not price increases; they're surcharges, and you have to pass on these
Oh, I feel better
surcharges.
now. It's a surcharge. Okay.
It's a surcharge, and in order to, it's unprecedented times, right? That's where you keep repeating yourself. Unprecedented times, we have to pass on these surcharges, right?
Sterling, next thing I know, you're going to tell me these are transitory surcharges. Go on.
No, but it's almost like, oh, you don't want to accept the surcharge. Well, this person's demand over here, they can fulfill it. So what do you want to do? And you know how many people are accepting these surcharges? A lot.
100%.
So
100%. How many?
yeah,
How many?
I don't want to say there. I'll just say it's more than half that of what my interaction is, and what my friends in other industries within the industrial segment, upstream as well as downstream. I have a lot of friends in the resin material who are doing the same thing. It's just like, hey, it's a 6% surcharge, throwing out a number, 10% surcharge, depending upon the material, but you need it to supply it to the customers that the Parker Hannifins and the Eatons of the world and the Rockwells of the world are selling to. A lot of names that we've talked about in this. Your favorite guy, Elon. His products are all being touched by all of us. So, if that kind of gives you some insight.
Yeah, I get it. All right, so hold that right there, Sterling. Hey, John Rook, are you there? John Rook? The chart life. I don't know if he's there or not. All right. So Sterling, hold that. Maybe he'll come back. So I just want to get a couple. Gilbert, you have a follow-up question, Gilbert? Gilberto, go for it.
George, I sent you a DM. I wanted to post something in the nest. I think it will be very enlightening about what I was talking about. It's one page of the final report of the International Monetary Fund about how they manage the situation of inflation in this tiny economy, but very representative. And if you can help me to post it, because I can't do it, I send it to you by DM.
Yeah, you know what? I'm gonna send it to Matt Cox. I'll get him to do it. Appreciate that. Hey, Jackson, do you have something to say, Jackson? What's up, Jackson? Jackson,
Yeah,
what's up?
I'm here. I think the overall sentiment, and I love these rooms, so grateful to be a part of them, is that the systems are broken and we've got so many issues. I wanted to ask Sterling really quick, how much of the fees and the increase in pricing is top line? Just to give you a little background, I've been with Starwood almost 20 years, and we've increased things to the gills, but I'm just seeing a lot of top line. It's not really helping the bottom line, and that's I wanted to pick his brain a little bit about that. Thanks for the time. Thanks,
Yeah,
guys.
Jackson, hold on. You say it's top line, not bottom line, meaning a company will raise their prices, but then they're getting eat up on costs, so they're just right back to where they started from. Is that what you're saying?
Absolutely.
Yeah. So again, it speaks to whether you're a price taker or a price maker. And by the way, Dr. Jim Walker, for those of you who don't remember, we had him in the room a month or two ago. Brilliant, one of my favorite economists in the world. He had a really interesting way of looking at this, and he spoke about comparing the ex post to the ex ante world. That for decades we get accustomed to certain rules of engagement, and there's an anchoring and the tendency to revert back to that. But we've had this incredible shock, and in the ex post world, things are changing. They've changed, but they're still changing. And we don't really know what the contours of the ex-post world will look like. And he said for many companies, this goes to your question, Jackson, they don't even know if they're really making any money. They're increasing, their costs are going up, they're increasing their prices. And then you have the whole issue. He brought in the whole concept. He was really interesting. He spoke about how he started his career, I think, as an auditor back in the 70s. And Jim is one of the few guys in the room that could relate to this because he's got as much gray hair as I do. There's this whole thing of LIFO versus FIFO accounting, and for decades nobody's really cared about because we've been in this great moderation, for the last 4 decades. Well, all of a sudden, whether using LIFO or FIFO, or can you replace your cost of goods sold, your raw material inventories at the same price now if you have to go buy it in the open market? I mean, we just don't know. And so Jim Walker's point was, he said companies don't really know whether they're profitable, depending on how you account for it, and we don't know where this is really going to settle out. So I just want to pour gasoline on your fire, no pun intended. But Sterling, maybe if you're still there, maybe you could speak to that, because I think Jackson's point, people just raising prices because they got to keep their head above water. But again, it's Wayne Gretzky. Please call your office. Go to where the puck is going, not where it is. And so I just think it's sort of like musical chairs, and we don't just know right now. So Sterling, could you speak to that in terms of how this type of phenomena is impacting companies' planning and thinking, and how you're supposed to conduct yourself in an environment like this?
So yeah, so I can tell you what we've done. So I started in outside sales, but I really came up through the product management side, business development. And what Parker has done over the last like 3 to 5, well, let's say pre-COVID, 2 years prior to pre-COVID, there was a big push for a lot of product managers to go through Six Sigma Lean. So like even myself, like I'm Green Belt certified, to be able to, as you're going through the sales cycle process, be able to apply a lot of those so you can help that bottom line number to avoid a lot of these top line type of increases, so that way you have a lot more control of your costs. So the days of like the sales and manufacturing butting heads over this and that, it's more those happen, but it's more like the conversations like, this is why you have to go give them an X% increase versus the old days of here's your increase, pass it on if you want to get your customer products. So I've seen a lot of that, which is tried to minimize some of the increases, but you've had to pass the increases on as they come. You can't account for, the freight companies giving you fuel surcharges to ship your products from all of the 32 warehouses we have around the country. So I don't know if that helps answer your guys' questions.
Absolutely, brother. Same thing. Because my example is I'm using, we're getting double, sometimes triple a room rate at the hotel, but it isn't showing up on the bottom line, George, because as I said, everything else is increased. And as he just alluded to, you've got all these little backdoor fees, etc. So everybody thinks that you're booming, but you're really not.
Right. It's mind-boggling to hear you say it, but I can believe it. And I want to ask you, so recently, and maybe Jim or anybody else can weigh in on this, the amount of price gouging that's taking place. I mean, just anecdotes. I don't want to get caught up in anecdotes, but when you have trend uniformity from multiple sources, it is interesting. So whether it's hearing from my friends who went down to St. Bart's, who normally would say, yeah, your St. Bart's is expensive, it's kind of New York prices, blah, blah, blah. They reported back to me this year, it was like twice New York prices. And in particular, one of my friends who doesn't drink goes out for dinner for two, no drinks, St. Bart's, $250 to $500 a night. He reports the hotel down there, I forget the name of it, I can't remember if it's Eden Rock or what it is, the hotel everyone goes to, normally $800 a night, $3,000 a night. I hear reports from Aspen, Little Nail, same thing. My brother owns a place up in Vermont, used to get like, $1,000 for a couple nights, $3,000 for a couple nights. And so there's this, pent up spending, savings, call it whatever you want. People at the highest end of the socioeconomic strata have money to burn, and price is no object. So revenge shopping, revenge consumption, call it whatever you want. But then for the 40% of the society, it's living paycheck to paycheck. Good luck. It's like they're getting absolutely destroyed. So, Jackson, could you speak a little bit to? I mean, it's hard to imagine when you double or triple your prices that it doesn't show up in the bottom line. Could you speak to that a little bit more?
Absolutely. I mean, in Miami, it's just absolutely off the chain, and I do feel like Miami's a super bubble right now. I know everybody loves it. I've been back and forth for 20 years, but it's there's a lot of crypto, there's a lot of scammy, I call it fake money that's out blowing it up every night at the clubs and spending these rates for the hotel. But where we're not getting it, George, believe it or not, is because if I have, and I'm not in operations, I'm at I'm at Starwood Property Trust, but just still see the numbers. You can't have a housekeeper call off because there is nobody to call in. So there's that, the comp line increases because of things not being as good. So yeah, I mean, it's an ultimate trick bag, and I wonder how it all plays out. I don't see any rainbows and sunshine at the end of the tunnel from where
I'm
I
with you.
stand.
And we're going to
And
go
we
here
are gouging, and we are gouging.
Yeah,
Absolutely.
no. Look, but you're running a business. I mean, if you got hosed, I mean, there's, it's a free market economy. People want to pay the price. I mean, I think it's reprehensible and deplorable, but you're not running a charity. I mean, the answer is that people don't want to pay that, then don't pay it. But I just think going back to the earlier part of this room, where we're talking about the supply side shock on a lot of commodity areas, and the Fed can't drill for more oil, and the Fed can't grow more wheat, and now it's morphed into the service sector. I mean, I just think, how they think inflation is going to be 2.6% next year, whatever their forecast is. Like, I don't get it, to put it charitably. All right, I could use some four-letter words. I'd rather not. So, I mean, you're just pouring gasoline on the fire. Stay there, Jackson. Really love your insights. I want to go to O'Hare and then internet philosopher, who I loved his tweet this morning. O'Hare, my friend, good to see you. What's up?
Hey, good morning, George. Good morning, guys. Fantastic to hear Jim on this Spaces. Had just a couple quick ones for Jim, if I could. He talked about the kind of the resurgence of the pro forma numbers, and one of the things that kind of we've noticed over the last few years is that has been a kind of a it's been kind of increasing. It's kind of been how do I say, like 10 years ago, for instance, we kind of went away with it after the GFC, and then it's been steadily increasing for the last few years. And while a lot of these numbers are not, they're not illegal. It's not illegal, per se, to use pro forma, but it's borderline. A lot of these things are just borderline. It's like, what do you
It's
call
legal
that? Is that
fraud. That's Jim
it's
Chanos
it's like,
coined
is
it
it?
legal fraud.
O'Hare, no, wait, Matt Cox, hold on. O'Hare, I
So
want to make, O'Hare, hold on.
yep.
Jim sponsored a seminar and probably, I think, invented the phrase, the concept of legal fraud. So
Yes.
I think maybe I think if your question's
Yeah.
about legal fraud, if generally we can make short shrift of this, maybe
Yep.
Jim could just speak to the concept of
Yep.
legal fraud. Is that basically your question here?
Well, yeah, but with regard to there's going to be a lot of margin pressure on a lot of companies going forward with the rise of inflation. So we've had it pretty good for the last decade. Now that the party time's over, in our opinion, a lot of the names that we're looking at that we even own, they're having a lot of pressure on their margins, and so they're starting to play with the numbers again. A lot of these companies are starting to kind of move things around a little bit on their P&Ls, and my question is to Jim, like we saw, you go and like to your point, George, 20 years ago when I started in the business in the late 90s, we saw that in the 2000 crash, right? With Tyco, for instance.
All right. So here,
Yep.
just sum up with a question, please, so we can get.
Yeah. So my question to Jim is twofold. One, does he see the same thing, an acceleration away from kind of the standard, the electric vehicle stuff that's been going on, the nonsense there, into more mainstream S&P 500 companies? Number one, and number two, well, I'll let him answer that because that's pretty loaded.
Yeah. Hi guys. So first of all, let me clarify the term legal fraud, and it's one of the models I teach in my fraud class, is from Bethany McLean. That is her concept. She came up with it after Enron, and it encapsulates a lot of the fraud that we see today. And the concept, just for those of you that don't know, is that legal fraud is fraud in which every individual action the corporation takes is legal, but yet there's an overall intent to deceive. So Enron is the great example, right? Because every single deal was vetted by the lawyers and accountants and signed off on by the board. And so Skilling and Lay could say, we had this vetted. But yet, as Fastow has admitted in his post-recovery speaking tour, And he said, yeah, the overall intent was to deceive investors. And so it's why prosecuting fraud is so difficult on an episodic basis in order to nail someone. And it's why almost always you do not see modern companies prosecuted for accounting fraud, because they get everything vetted. But the overall pattern within the broader concept can be to deceive. And that's why I've been railing against the pro formas, because the pro formas can be massively deceptive. And take again my friends at DraftKings, Jason Robbins and I, as I say, my BFF. But share-based comp was roughly 50% of their revenue last year. Let me repeat that. Share-based comp was roughly 50% of their revenue last year. They are guiding long-term to 30% adjusted EBITDA margins for their betting business. That excludes share-based comp. So take your pick.
And no, Jim has not been drinking. Okay, this is insanity.
And so my point is, if those are your definitions, and then so CNBC, remember, everyone comes out and says, well, they're guiding to profitability in 2025. Well, except for the fact that they'll probably lose about $500 million.
So Jim, on that note, that's exactly right. So you're going right to the heart of my question, which is this kind of shit can go on for a lot longer than we all expect. I mean, it's been going on for a long time. It can go on for a lot longer. And the reason is, right, because as long as investors are willing to accept these numbers as factual, right, as the way to do it, there is no fraud,
but
right?
there's
Unless
a bigger,
it's explicit.
But there's a bigger problem. Let's get to the just to talk about share-based comp. You're actually paying your employees are getting 30, 40, 50% of their comp in the form of shares and RSUs.
Right.
And if that stock doesn't keep going up, you actually have the problem of having to issue more and more shares for any given amount of SBC, and the virtuous cycle becomes the virtuous circle becomes a vicious cycle on the way back down. You get massive dilution, and that's what derailed it in the post.com era.
That's right. And what you said at the very top, which is critical, is that it all works well until the stock prices start to go down, right? So while they're rising, no one gives a shit. It's like everybody's looking the other way.
Yeah, well, here we agree. I don't know, we spoke about the thing a little bit earlier. Total 100% O'Hare, 100%. So you just stay there, O'Hare, because this is great having you in the room with all these other smart guys. Let's go to Internet Philosopher. I can't remember what the great tweet was you put in there this morning, Internet Philosopher, but I've been following you now. Loved what you said. Internet Philosopher, please unmute yourself. The floor is yours.
Thank you, George. Thank you for paying me the compliments. It's heartwarming. I see we got both Socrates and Diogenes on stage now, so in the real world, this would not end well. I think we're seeing inflation right now in the United States, and a lot of people have brought up the fact that you obviously have price makers and price takers. And interestingly, we're seeing Sterling and Jackson in two very different businesses with two very different price elasticities towards their clients. And I think who ends up footing the bill for inflation is very dependent on how elastic demand is to price movements. Where we are seeing Jackson in the service industry, where if you increase prices, you're going to see a very sharp decline in demand very quickly. They have to pick up more of the inflation bill than Sterling has to. Where he kind of puts a bullshit surcharge on his product and keeps on going. So these are one of the sort of double-edged swords with inflation. And what I think is going to happen is we're seeing a lot of these speculative tech companies they're not making any return on their equity. They are bloating their balance sheet because obviously more stuff they own, the more they're worth, right? Cash flow doesn't matter. So what I think we're going to see with higher inflation is a larger focus on return on equity directly. And with a lot of companies, especially in the United States, running their policies around buybacks as opposed to paying out dividends, that can create a very vicious circle because the bought back shares obviously end up as equity in the balance sheet. And that equity goes to Solidity, which again, they can use to finance the business so they can lend more money. And with low interest rates, they can lend more money than they reasonably, sustainably should be able to. So when inflation increases and puts real financial pressure on these businesses, they're going to start to seek liquidity. And if their stocks for some reason tanks, let's just say, for example, Tesla has a massive accounting fraud and goes to zero. That's 1.92% of the S&P 500. That would drag the index down by about 25% in a day, meaning that all these companies would essentially lose 25% of whatever their own shares are as equity on the balance sheet, which could trigger margin calls from their banks, and thus the evil cycle begins. And I think future now, if you're looking at inflation and you're looking to invest, I think probably getting consumer goods producers, and generally the closer you get to commodities, the less elasticity you're going to find. In other words, people producing food are generally going to keep producing food even if their cost of goods increase. So me personally, I will be moving more towards commodities, not necessarily as an asset, but mining companies, food producers.
100%. It goes back to what we keep talking about. You want to buy price makers and not price takers. You want to be as upstream as you can as possible. Hey Jim, question for you. Just talking again about the scam accounting and the ability to finance, refinance, access markets, value of employee stock options, et cetera. I'm sure you saw the news. It came out in the newswire about Co2. The redemption is only a couple of 250 million, whatever, but they had to hold some back for the privates, blah, blah, blah. We saw recently, a few weeks ago, Tiger Global doing $1 billion issue. What's the matter, guys? You're running tight on cash, etc. I look at, and Jim, given your experience in financials, you always look to see where the most rapid balance sheet expansion occurs. That's where the troubles ensue. And so, in parallel fashion, you look at the speed with which Tiger was cranking out these venture deals 2 a day or whatever it was. I mean, like, what could possibly go wrong? So I kind of think that there's like these guys are completely stuck. There's no way out. It's like pinata time. It's like a hanging curveball. It's not going to break. And, you're going to see massive redemptions. It's early days, but whether it's the third quarter, fourth quarter, whatever, and to the extent these companies all need more money to negative cash flow, you're going to see down rounds, et cetera, and it's so they're circling the drain. It's reflexivity in reverse. So, what part of that would you disagree with, agree with, emphasize, whatever? Just any of your thoughts about the tightening liquidity conditions for in sort of the La La Land market, the Ponzi market?
Well, I mean, hedge funds have evolved in more ways than one, George, and hedge funds had their golden age in the post the .com era, because they were short the garbage and long, basically long value, and rode that for better part of seven years. And then they discovered the pleasures of leverage and ended up being long all kinds of credit stuff or selling premium in 06 and 07. And most of them, went over the cliff with the market and have never kind of recovered. But the growth hedge fund guys now, best I can tell, have become hybrids between, aggressive growth and venture capitalists. And so an increased amount of their core portfolios are privates, as you alluded to. And that to me looks like some of the mutual funds in the late 60s, for those of you that are really ancient like me. When a lot of the go-go funds juice their returns with privates and 144 stock. And it ended up being their undoing in 69, 70, and 73, 74, and they basically got wiped out. It's the same thing. I mean, you have a lot of these guys aggressively funding privates, trying to take advantage of what they thought was a discrepancy. But now you have public prices below that of where the privates were last year. So you've got the inevitable markdowns and or distributions or gating. I think that's probably going to happen if it isn't already happening. So for funds that have 20%, or I've heard as high as 40% of their assets in privates, that's going to be problematic.
Yeah, and Jim, it's one thing if you're running a hedge fund and you play games with the marks and you have gates, fine. but you're the CFO of T. Rowe Price or Fidelity, and you've got 5 or 10% of one in your funds to juice the returns. You know, these guys, as they should, they have to err on the side of being more conservative. And, you know, once that tree falls in the woods, what happens to all the pension funds and other investors, you know, in terms of trying to keep faking it till you make it? I mean, I think
Well,
as early. I
George,
mean, wasn't
George,
there,
it's
Jim?
even George. It's
Wasn't
worse
there?
than that. It's worse
Go
than
on.
that. You had aggressive growth hedge funds that were down 15 to 25% in 2021, and are down a similar number, maybe a little bit better, so far in 2022. Down 15 to 25% in 2021 is a negative 40 to 50% alpha year.
Totally. And Jim, you know, it was amazing. There were some funds that escaped. It was funny. Just, you know, someone tweeted and I resent it out. You know, just when you think, you know, valuation it doesn't matter. Maybe it's the only thing that does matter, because in a world with free money, valuation doesn't matter. But you look at those funds. I'll mention names. You can't because you don't want to. But you look at like a Viking or some of these other ones where they actually wound up having a decent year. And then you look closely and you realize the only reason it was a decent year is there's some bullshit SPAC thing they put their money into, and they marked it up and it went up like 5x. And I'm saying to myself, what would the numbers have looked like without that? And so, to your point, I mean, you know, Tiger Global I think was down 7% last year.
Yeah,
And
yeah.
I rumor has it they're down 30 already this year. And so I think some of these guys, I don't take it literally, but basically they're bust already. It's just give it a little bit of time. There's no way out on these things. And you know, you take a look at. I mean, Jim, I don't know. You saw, was it SoftBank announced they're trying to like float ARM again or something like that? I mean, you know, I've done a lot of work on Soft. Again. By the way, boys and girls, none of this is investment advice. Do all your own work. Do not listen to me. Do not listen to Jim Chanos. Do not listen to anybody in this room. You're on your own, okay? But to me, ARM, you know, I was doing some work on this, and I don't know. I mean, they want to float this. I don't want to say too much about it, but I encourage everyone to go take a look at the valuation that they're hoping they're going to get for ARM. Have you had a look at that, Jim?
No comment.
Again, no comment from me either. We don't want to get in the single stocks weeds. Heavy laughter, please note. All right, so who's one? Okay, so we're going to get Ray up here. Ray has a question, I think. Ray, welcome to the stage. What's up, Ray? Ray? I don't know where he went. All right. Any other questions? Otherwise,
I have a quick question.
Hey, yeah, go for it. Go for it.
Yeah. Can you talk about the negative trend towards negative book value? I've lost track of the number of companies, major companies with negative book value. And just in following Boeing, for example, there was so much talk about Boeing and you know, the value of the franchise, the whole bit, but very little mention that it reached a negative book value of 18 billion. Maybe it's down to negative 14 billion. Do you have any thoughts on this trend? And will it have to reverse at some point?
I mean, to put it in Kramer speak, Boeing has been and remains a do not buy for me. Okay, so you know, I think the answer, the question is really even more interesting, more generally writ large than Boeing specifically. And Bob Justice, I'm going to turn this back on you, and this is an invitation to anybody else on stage, including Jim. You know, I haven't heard this spoken about lately, but a year or two ago, or 3 years ago, in the midst of all the QE nonsense and banks accumulating more and more fixed income securities in their balance sheets, people do the back of the envelope calculation, the napkin math. Oh, well, if they have X amount of bonds and the bond prices go down by Y%, it'll wipe out their equity. Bob Justice, your first in line to answer the question. You take a look what's happened to the price of fixed income securities, and I don't have it off the top of my head. I don't know how much the Fed owns, whatever. I mean, total debt outstanding is 30 trillion. I don't know, the Fed owns what, 8 or 9 trillion or whatever the whole thing is. Okay, you are on track for the worst so far, the worst year in 40 years if you look at where the bond market returns. So if you put pencil to paper and start figuring out how much equity, how much has the Fed lost actually? How much has the S&B lost? Because I think the S&P's quoted actually, and I haven't done the numbers. I'm too lazy. I'll go do it eventually. But Bobby J, any thought about the solvency of the central banks?
Yeah, I mean, I think that's one of the reasons bank stocks have been trading down. I think we reached a kind of almost a record high of treasuries being 18% of the total bank's balance sheets, because we had very little loan growth for the bigger banks and almost no loan growth across the industry as a whole. So, it's not only 1 year, but this is going to be the first time since 1958, 59 that we had back-to-back years of fixed income losses. So I suspect that, I think across the board, there's been almost 3 trillion in losses in fixed income, or just say markdown or drawdown, whatever the current term is. And I think we'll see that in banks, but we're also going to see that that business of the Fed writing checks to the Treasury reverse. But net, since they're one entity anyway, I don't think they really care. But yeah, you will see markdowns in the portfolios.
But Bobby J, more than just the bank stocks, I'm speaking now about the central banks. Like, all of a sudden we figure out, well, the Fed just lost $1 billion. How much capital they had? Or, the SMB just lost $500 million. $500 million, whatever. Okay, what about the solvency of the central banks?
Well, I mean, they don't. I mean, they print, so they that's not going to be an issue, and it's a benefit. Inflation is a benefit to Treasury net loss. So if you look at the net position, 29 trillion in debt outstanding, and 8 or 9 is owned by the Fed. They still rather have higher inflation than lower inflation.
No,
So,
well, we agree on that.
no. You will not see you. The answer is you will not see. I mean, you'll see political pressure, because now, it's reversing, uh, and so far the cost of financing is still pretty low. But I think we'll see that going up, George. And I think that will be the interest expense is the bigger issue, George.
Yeah, okay, so Bobby, let's stay with that. The operative term you said so far. So again, go to where the puck is going, not where it is. Okay, let's go to interest expense. So I had this discussion with somebody else the other day. So total debt outstanding. The total debt outstanding is about 30 trillion. All right. So ceteris paribus, for a 1% increase in rates, you're talking about a $300 billion increase in interest expense for the government.
Correct.
I think the weighted average interest rate last year, I looked at this the other day, was something like 1.24% last year or something like that. Okay, so we're approaching already the 1% threshold. And if you say, okay, let's say your story and my story about higher rates is true. Okay, it's true. Tax revenues go up because the economy is nominal. But what's also true, if you were to take rates, say the government's average cost of debt went from 1% to 3%. That's a 2% hit on 30 trillion to 600 billion. That's a material amount of money. And you start looking at, especially in the context of, you look at the you look at the part of government spending which is discretionary, because 70% of it's not discretionary. There's interest expense or entitlement, Social Security, whatever. So only 30% of the government budget is discretionary. And so if you start and you say, okay, the government budget is, Bob Klein, could you please mute your speaker? If you say to yourself, okay, the government, excuse me.
Yep.
Bobby, help me.
I'm with you. No, so look,
Bobby, hold on. Well, what's the size of the government? What's the size of the budget? 6 trillion or something? I've lost track of my mind's scrambled eggs right now. How big's the budget? 6 trillion? 4 trillion? I can't even remember. 7 trillion?
Wait, hold on. I'm pulling it up right here.
Or if anybody on stage knows the answer to the question, how big was the government budget this past year? I want to say it was I think it's like 6 trillion. Yeah, no, maybe it's 5, because the whole economy is about 20 trillion, and normally, but the numbers are all screwed up now. Normally, the federal government budget runs about 22% of total GDP. So 22% of 20 trillion is 4.5 trillion, but then it was more because of the pandemic, blah, blah, blah. So I don't know if it's like 5 or 6 or some number like that. If that's it. Jackson, you know the number? You know the number, Jackson?
The number that I've been using is 6.71 trillion. I don't have it in front of me, but that's
okay,
the most accurate.
All right, that makes sense. That makes sense because what happened was it was running like 4-ish, I think, and then it went crazy because of the pandemic. So the 6.7 is an overshoot. So let's just say, for the sake of the argument, it's 5. It could be 5 or 6. I'm not really. We're interested in accuracy, not precision. So let's call it 5 or 6. Using the napkin math, Bobby, the 2% increase on 30 trillion is 600 billion.
That's correct.
600 billion on 5 or 6 trillion. Let's use 6 trillion because it's 10%. It's a nice number. That's 10% of the entire government spending. I mean, and keep in mind, total discretionary spending is 30% of the total. So if you say 30% of 5 trillion, 30% of 6 trillion, you're talking $1.5 billion, $1.8 billion. You know, as Senator Dirksen ever once said, a billion here, $1 billion there winds up being real money. You're talking about a delta of 600 billion on a discretionary piece, which is only like call it $1.5 trillion. I mean, you can't. I mean, it will not happen. It cannot happen. I mean, it's just the laws of economics. So the question, okay, so you may say, well, George, tax revenue is going to go up a lot, blah blah blah. Yeah, but still, I mean, there's a problem here from this. If when the rates are allowed to expand, I mean, look backwards. I mean, it's true debt's gone to the moon, but what's also remarkable, and you can school us on this, Bobby, if you go back a year or two ago, even though the debt was in the stratosphere, the interest expense line was really pretty low. It was only like 300 billion or some number like that because the rates were so low. So if you looked at, and then if you look especially in the private sector, people want to talk about, excess debt accumulation. Well, first of all, the debt accumulation in the last few years has been in the public sector balance sheet, not the private sector balance sheet. And the public sector deficit is the private sector's surplus. So all that spending has been good for profits and good for individuals. However, that starts to come in. And Bob, you got to help me on this. But someone was explaining the other day, and I hadn't looked at it. I was actually kind of surprised.
You're breaking up.
Sorry. Someone had said to me the other day the deficit's coming way down because tax revenues are coming in pretty high, and that the deficit, which crested at maybe 2.5 or 3 trillion, a year or two ago, is maybe going to come down to like 500 billion. Does that sound about right to you? We're talking about the deficit, Bobby. Is that about right?
Yes. Yeah. And we're going to have a $1 trillion interest expense annual. And even the CBO did a projection, I guess, last year, and they were saying that 20% of the deficit is going to be interest expense by, I think, 2032 or so. So you just pulled that forward because their assumptions did not take in, the increase in inflation and higher interest rates. So,
right. But so you take that observation along with the idea that in recent years, foreigners have been buying less and less of our debt, and the Fed's been having to buy more of the debt because of QE and all that nonsense. And now you're talking about an increase in supply of debt. Doesn't that add up to you, Bobby? All things being equal, which they never are.
Yeah, I mean, it's kind of the point of no return.
Hold on. Let me finish the question. Let me finish the question. All things being equal, which they never are. Doesn't it mean you need to have higher real interest rates to attract capital?
Yes, it does. And, the argument against MMT is the mathematical argument that once you get to a point where the interest expense just overpowers tax revenue increases, that's a problem, right? So we can have tax revenue increases going up 10% a year, but if the interest expense is going up 20% a year or 30% a year, once we see the short-term treasury bonds start to roll over, because Michael Howell talks about this all the time. We have a debt refinancing problem, George, and that's one of his biggest theses, right? Or biggest thesis. So that's exactly right.
100%. All right, so now let's go to just a second here. I want to recognize Marathon. Marathon, good to see you again. What's up, my friend?
Hey, George, can you hear me okay?
You're good.
Great. So I've done a lot of work on these longer term debt to GDP impacts, and One of the pieces that I did has just been picked up and used. If you're not reading David Hay from Evergreen Gavcal's Bubble 3.0, you really should. It's a really remarkable piece of work. But the work that I did that he has used in that is looking at these 10-year CBO projections and seeing how wrong they've been over the last 10 years, over the previous 10 years, and extrapolating that out to the future. Because again, the current CBO numbers tell you that we're heading towards, something north of 150% GDP at the end of 2030, and close to 300% at the end of 2050. If you just look back at the last 10 years and what the CBO estimated back in 2000 or 2010, we underperformed the GDP growth by about 20% and underestimated the debt by about 18%. So debt is growing faster and GDP is growing slower than those CBO projections. Where it gets you is that 2050 is not a 300% GDP debt to GDP issue. It's a 500% debt to GDP issue, and that's not even taking into account the potential for higher rates on that debt or the compounding interest on that additional debt. So the flight path from here is really, 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 really potentially treacherous. So I will try. I apologize. I'm at a little league game, so I don't have the ability to post that chart, but I'll try and post it later today.
Marathon, I'm really grateful that you made that contribution. If you could please post that, that'd be wonderful.
Will do.
All right. Hey, thanks for that. Please mute yourself. All right, Bob Klein, you've been up. We haven't heard from you. What's up, Bob Klein?
Hey, George, I just want to say it's really a marvel to see what's being discussed in this room. It's an example of financiers and finance at its best. I mean, good stewards of capital, really just fighting the stock promoters and calling out their accounting shenanigans. And not only that, I mean, you guys grasp the mischief being perpetrated by governments in terms of inflation. I mean, this is just a prime example of just fighting for truth to protect capital, make it grow. And what we're seeing right now on Wall Street, of course, during these speculative booms is just the opposite. I mean, you got relentless pumps and cheerleading. So I just want to say, just refreshing to see all the guys on this call pursuing a different approach. That's all I got.
So Bob, I'm really humbled by your compliments. I have a question for you and for everybody else in this room. I'm going to come out of the closet, so to speak. So I have it in my head now. I actually want to up this game. I want to put this out as to a focus group here. So anyone and everyone should weigh in on this. So I think this type of conversation deserves a bigger audience. And friends of mine say, George, you're natural for this, blah, blah, blah. Yeah, you can be loud and whatever, but you speak the truth and yada, yada. And so, someone said to me, you should become like the Joe Rogan of finance or whatever. I'm not sure I want to be Joe Rogan, but that's another story. Anyway, the point is, I think the public generally is being horribly served. CNBC's, the Cartoon Network, as Mark Ahodes calls it. Every time you see something, you feel like you're trying to be sold something. People are shilling crap. Everything's, sells a 4-letter word, blah, 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 blah. So I'm thinking to the point now where I want to take this to a bigger, we're going to need a bigger audience or whatever. And I actually, a few things. Whether it's, Spotify, Bloomberg, if anyone has any ideas or any connections at any of these media outlets where maybe able to talk to somebody, I was thinking of sending them some recordings because I have all the recordings of all our rooms to see what this is about. And in particular, what I think differentiates this is me talking, but I want feedback from all of you. It's the sort of authenticity and the open platform where, we allow a lot of people in here to talk. But as I always say, it's not a democracy. I do shut people down because I want to keep the conversation on the straight and narrow. Those, people know the way I roll. If you're talking sense, I give you a lot of wide berth. If you're not, I cut you off because it's not fair to the hundreds of thousands of people that are listening. And I also think, what have I learned from 40 years of mistakes? Well, I've learned a lot, and I happen to know a lot of people. I'm able to get them to come in these rooms. And I think if we had a bigger stage, they would come on the show because it gives them visibility as well, whether it's Michael Howell or Michael Belkin or Jim Chanos. It just blows me away. I sat down the other day and made a list of all the people we've had in here. for the last 3 months. I basically started doing this in December, and I couldn't believe it. I mean, and it's just people I know. And I also think there's an obligation. It's funny. I think the older crowd, and I consider myself older, has been canceled. And I say that not from a political perspective, but actually they've been canceled by technology because they have not harnessed social media or Twitter or any of this kind of stuff. I mean, I wasn't really much into Twitter until like a year ago. I didn't know what Twitter Spaces was. And to try to get Dennis Gartman, it's hysterical. To try to dig Dennis Gartman's like Michael Belkin. Okay, Michael Belkin, who along with Michael Green were just incredible response in this room. Michael Belkin, you're going to laugh, but I'd say it to his face. Michael Belkin did not own a cell phone before his Twitter Space 2 weeks ago. I asked him, do you want to be on a Twitter Space? Why do I want to do that? I hate Jack Dorsey. It's like, no, Michael, hear me. This is going to give you a bigger platform. This is going to give you a way to which to be heard. So you had to go buy a cell phone. You had to find someone showing up with the Twitter app on, blah, blah, blah. The point I'm trying to make is there's a lot of wisdom out there, and I'm talking about the older generation, my age, Bobby J's age. Okay, Jim Chanos is still very much in the public, square, so forget about him. But people like, Dennis Gartman or Walter Deemer, the retired technician, 50 some odd years of experience. We're going to get Don Cox in here soon. There's a whole generation of market professionals who have so much to offer, and their voice is not being heard. And I kind of think I could also be a bridge to some of those people because I have relationships with them. So I'm going to stop on the rant. I really want feedback and I want suggestions, about how one would go about doing this if they know anybody, and also what part of these rooms do they view to be most valuable. I think it's the authenticity. I think it's the raw, unscripted nature of it. These perfectly conducted rooms where they've been sanitized. I think there's a feel of artificiality about that. I've been told by many in DMs that people like when I swear. I'm fully capable of stringing sentences together without swearing if I so choose to. But I just think there's a need for something like this. And we could even extend it to having some companies come on and I could interview them, but I'm not going to do it in shilling, puffery, Kramer type style. So if anybody has any suggestions about that, I'd like to hear from you because I'm seriously thinking about taking this to a much bigger stage. And I think I'd want it to be, imagine a Joe Rogan type podcast where it's not just me interviewing somebody. Yeah, I'll have someone come in, but where you open up the Twitter space and you have dozens of people, friends of this room, asking questions. I think that's really what makes it differentiate and really makes it resonate. So let me just stop. Does anyone have any thoughts, comments, reactions to any of that? Please raise your hand. Jackson, I'm going to go to you. Jackson, any thoughts?
You hit the nail on the head. It's so authentic as it is now. I wouldn't want to see any of that authenticity wear off. So I don't have the answer for you right now, but I love what you're doing. I really do.
Yeah, thank you for that. I started this out just because what the heck, I couldn't put up all the garbage I was listening to in FinTwit, so I figured, I'll just do my own. Intercept, did you have a suggestion? I see your hands up.
Hi, yeah, thank you. I've actually been lucky enough to work with a few big influencers, mainly doing their accounting and stuff like that. And what I can tell you is there's no barrier to get into Spotify or YouTube or any of these platforms. There is one currency respected in this space, and that's a following. And on Twitter alone, I'd say you are sort of getting to this spot where it would be very easy for you to have a Spotify podcast. That's not a problem. But what I think differentiates you is, at least to me, it seems like you don't have bills to pay. And there's two problems you will run into. Number one is the algorithm respects volume. If you want to grow, you got to put out volume, meaning that you will over time dilute your own content. You see it all over the place. You see people starting really good channels, and then over time it just becomes weirder or more and more obscure. So if you want to start something that is more organized than this, I would make sure that you have a very solid plan of content and filler content planned out a long time in advance, like at least 6 months ahead of time. And then obviously I am available knowing the business a little bit. I know it as a business and I sort of know what you need to do to grow. So it's I'm obviously not a social media professional myself. I'm an accounting and auditor major. So it's not my game, but I know how to play it if need be.
No, I really appreciate that, and we can be in touch by DM. I just followed you, so we could talk off channel. I actually think, and I asked you a question, anybody else? I think part of the trick also, the authenticity we agree on. I also think the exposure thing is a very key thing. You don't want to overexpose yourself. It'd be very easy for me to do this every day, but I have a life and I have a job. I think maybe twice a week or something like that. Once during the week, once on the weekend, maybe at a regular time. Say, I don't know, 2 hours, because I also notice the way these rooms roll that they can go 5 hours, but at a certain point, it kind of starts to lose its mojo. So set a time. An hour is too short. I think 2 hours is good. People can tune in and tune out. But I just observe, I mean, this is mind-boggling. I mean, Bobby J's in here, not just because he's a friend. He's obviously getting a lot from this. Okay, we started this room. I just want to point out, we started this room, I think, 2.5 hours ago. And most of the people on stage haven't left. Some people come and go, but you can't force somebody to sit through something for 2 or 3 hours unless they're interested. People are here because they're interested. So I think there's a trick to, you got to make it long enough so it's not this dumb soundbite thing. You have to be able to flesh out what's important. You have to allow different points of view to be heard in the public square, but you don't want to make it to be long. So if you said, you know what, 2 hour show twice a week, once during the week, once on the weekend, whatever. And I think there's a market for it. So Jackson, I see you have your hand back up. What do you think?
I just was going to see if we could get Dave Collum to speak to it, because I know he's on a lot of podcasts and channels and things of that nature. Also in here, he's such a great mind.
Excellent idea. So Dave, are you there, Dave Collum?
Yeah, I just unmuted. It's interesting you bring up that issue of how to go to another place. I had a prominent blogger try to sell me on the idea of blogging. And I just had this feeling it wouldn't work when the time came. One thing that would help, well, first of all, George, you're still digitizing through my phone. I don't know if anyone else is hearing that, but you're starting to sound like a robot.
Hold on, Dave. One second. Oh, here, Jackson, Bobby J. Is anyone else having a problem when I speak?
Yeah, we do.
Yep. Yes. All right. I will move to a different place in the house. David Collins, keep speaking. Go ahead.
So I agree with Internet Philosopher. You can have something that works that doesn't translate. And I decided that what I do wouldn't translate to a blog. Just some thoughts. You pinged buybacks, and I had this. I've written about buybacks being an awful thing for many years, but in some sense, the buybacks are a consequence of the low interest rates, because if your balance sheet can get no return, then buying an overpriced stock becomes possibly your best argument. So that's kind of a benign view of buybacks. But I think when you're buying a stock with a PE of 50 to get a 2% return, that's because the treasuries and other things you'd put on the balance sheet. If interest rates were at 15%, like in 1981, you would never use that balance sheet because you're making so much money off it. The next thing I wanted to ask about, a couple of quick questions. I often cite the 20% zombies in the S&P, which I get from very credible people like James Grant. I have yet to find a list, which should be 100 companies. And if anyone knows, has a list of those 20% zombies, I'd love to get it, but I'm not finding it easily. And then the other thing is, and there were only 2% zombies back when interest rates were 9%. So that's a catastrophic, suitcase nuke. The other one is I was having a conversation with, again, I don't know if it's true, but the guy I was talking to certainly is as credible as anyone I know in the known universe. He said we're going to turn over $17 trillion in our sovereign wealth in the next 2 years. And that strikes me as another suitcase nuke. But
yes, Dave, hold on. We're going to turn over 17 trillion of sovereign, meaning bonds have to be rolled. Is that what you mean?
You digitized on me again. Turnover. I heard we were going to turn over 17 trillion of U.S. debt in the next 2 years. Can someone confirm that?
Bobby J.
That's correct.
So
yeah,
maybe that's not a problem, and I just don't understand the mechanics of sovereign debt rollover. But Sounds like a problem to me.
Yeah, you know what? We're going to get Michael Howe back in here because that's right in his wheelhouse.
You've cut right out on me.
Yeah, I'm sorry. The reception. I don't know what's going on here. Can people hear me now or not?
You're still a bit crackly.
Let me move again.
Got you clearly.
Hey,
right.
George. I'm
Yes,
going
Bobby.
to, offline, I'm going to talk to you about production. I can help you set up better production operation here for you, because that would be the step that you have to do next to do
Yeah. Totally. What would be big help? If anyone has a connection with Bloomberg,
I can do that for you.
Sorry?
I can do that for you.
Yeah, I'd really like to have I've been trying to reach out to them, but they don't respond.
George, a simple question. Do you do these on a schedule? Because I just stumble upon them.
No, they're ad hoc. I think part of the more...
I think it would help if you, in the very least, just said we're going to do them, Tuesday, Thursday at 4:00 or something like that. Because I'm sure I'm missing great. These rooms it's amazing. It's like Studio 54 where, Dustin Hoffman shows up, right? That's what's great about it. I did not expect to see Jim Chanos show up, right?
Yeah.
George.
Dave, you know what's funny? I've been trying to get Jim to come in as a speaker for weeks.
And he became one.
And today, I didn't even invite him today. He stumbled on it, and all of a sudden, there he is.
Yep. Hey, George, Dave, I would just say, look, you guys are a few years older than me, but I would just say Twitter literally is the platform you need to be on, because you could reach an audience bigger than, if you are like on Spotify or on YouTube and you have a podcast, that's fantastic. The problem is those are just very well done, produced. You have one or two guests. This platform here that you're on allows you to reach literally countless of people everywhere in the world at a moment's notice. And to Dave's point, if you had like 1 or 2 days where people knew you were going to do a podcast, spaces, that's fine. But doing these ad hoc spaces is fantastic because it allows people to jump in when they need to, when they can, and allows them to do that from their phones, in their cars. As Dave was, you were in your car the other day when you hopped in here. So, I mean, you could do it everywhere. That's the beautiful thing about Twitter, is it democratizes all this. When you go to Spotify, when you go to YouTube, it kind of brings it all down, condenses it into a, where you sit down and you just listen to two people have a conversation. That's all fine, but those things already exist. I think what makes this special, George, is the fact that you can draw so many different people from so many different walks of life, young people, older people, people with experience, people with no experience, and have a conversation and have a lot of thought go into it. I mean, and again, it can be done at a moment's notice, anytime, anywhere that you feel.
So here, let me ask you a question, okay? I really do believe, and it's not me smoking my own Kool-Aid, drinking my own Kool-Aid, we have the best content of FinTwit, period. All right? Period.
I absolutely agree, 100%.
Okay, so the question is, this is amateur. I don't know what I'm doing. This went from like just an idle thing. I had 2,000 followers 3 months ago. I now have 18,000. This thing deserves to be heard by hundreds of thousands, if not millions. Other than organic growth, what do we do to have that happen here?
Well, go ahead, Dave.
Sorry, yeah. So here's the thing that you need to be very cognizant of. Dave and Bob. Bob makes a good point where production value is concerned. That is important, but content is always king. You can sound like you're in a submarine if it's good enough. Doesn't matter. But content is important overall. But the other thing is, all these social media platforms cater to very different types of people. So generally, YouTube is the one who's going to pay you the most, meaning that you can eke out a living with 500,000 subscribers on YouTube if you get decent views, and especially in the finance space. But there is really no cost of being everywhere. You can record this space and upload it as a video on YouTube. That's not a problem at all.
100%.
That's like extra 5-minute thing, and you can just make it a podcast, make that into an RSS feed, and now you're on Apple Podcast, you're on every podcast app, you're on Spotify, all at the same time, and you're going to grow sort of a little bit here and a little bit there, and at some point, one of these platforms are going to want to partner you, Twitch, for example, or YouTube partner, and at that point, you may sign away some rights to be in other places. But organic growth, there's a few things that I can tell you that are extremely important. And it varies from platform to platform. Like Twitter obviously wants you to keep doing spaces, because that's whenever somebody's in the space you're in, it's just fantastic growth opportunity. So Twitter definitely spaces, and YouTube, it is consistency and volume. Like they want content and they want watch time. So if you can have a 2-hour thing and people actually spend 2 hours watching that thing on YouTube, YouTube will love you and push your stuff. So
right, yeah. So let me ask you a question. How does YouTube or how does Twitter benefit from me doing spaces or podcasts?
Well, I mean, generally speaking, for all of these platforms, I think YouTube, Spotify is probably the only one I know that makes their main source of revenue from paid memberships. But all the other ones are advertisement funded, meaning that the more time I spend on the app, the more money they make.
Well, I think also I think it depends. Here's the thing, George. I mean, it depends on what you want to accomplish. Do you want to accomplish this as a like what who was just speaking there? Anyway, the what? The internet philosopher. So what he's saying?
I'm sorry, you broke up a little bit. I didn't hear you.
No, yeah. What I was saying was like what you're saying, internet philosophers, is absolutely true. Now, what you're talking about is a business model, right? If George wanted to go out and do this as a supplemental income or as a full-time job, now that he's kind of retired out of his profession, then those are the kind of, the Spotify, the YouTube, and that type of thing where you can actually have an income source. Now, with Twitter, if that's not what you want to do, I think what George is wanting to do, he has a passion for getting the message out there to people not to get fucked in the investment space, in the investment world, right? There are too many people out there that are just going to get completely hosed over the next few years. And I think George is passionate about getting the message out there to people that are watching CNBC, that are watching these closed networks that just feed you nonsense all day long. And so those are the two different types of platforms. And from what I understand of George, and I've known him a while now, he's very passionate about that. So Twitter is literally the best tool to get that message across. Now, whether or not you can monetize it and make some money doing it, that's a whole different story. But if your MO is just to get that message out there, and furthermore, to get as many interesting people voices on your spaces as you can, this is the way to do it, because you couldn't do that with a podcast. You couldn't do that with a YouTube.
Here, let me interrupt. Okay. I mean, I know Jim Cramer. I can run rings around Jim Cramer. People, he's entertainment, all right? People are dying for information, and I make plenty of mistakes, but I'm not shilling for anybody, and I'm speaking the truth, giving it my best shot.
Yeah, right.
And I think that authenticity resonates with people.
Yes.
And I think I could kill two birds with one stone, because frankly, I'm willing to commit more time to this. I'm doing this for free. I'm willing to commit more time for this, but I want it to be free to people to listen to. But if I'm going to put more effort into it, then I want to start getting paid for it. So I really want to do both, O'Hare.
Yeah.
I really want to do both.
And listen, George, I think this is the way to do it, because you could see just having a 2-hour deal. Sometimes we've been in spaces together. I've been in there with you for 4 or 5 hours on a weekend where you'll have 2,000 different people hop in and out during that time frame. I mean, that's what's exciting. People from all over the world literally can come in, tune in, listen, ask a question, or just listen and hop in and hop out, follow you, follow other people, other speakers, and get that information out there. So it's exponentially growing. It's just, it takes a little bit of time,
No, so I get it. All right, listen, you and I will talk offline, O'Hare, before the break. All right, a few more questions, and we're going to stop.
I'm going to get off now, but I just want to speak to what O'Hare was saying is, even if you don't want to make a living, they are intertwined. You can't do one without the other. Success means making money on these platforms, and that could even just mean, paying an editor to edit these down and make them more palatable for a YouTube audience, for example. If you don't want the money yourself.
I understand. Look, the sound quality should be improved. I got that, but I think the fact this is not polished, that it's raw, I think that authenticity really counts for something. I probably need someone to do a better
100%,
job.
George. 100%.
I think we need a better job of the music quality when I do the 1-minute intro, whatever. But that's all little stuff. The most important thing is content. You said it, right? I believe I have content.
You do. I agree. And you seem very authentic. And if you, are what you say you are, and I don't have any reason to believe that you're not, I will let you leverage my skill set to help you.
No, I look. You're going to be my new best friend, internet philosopher. You and I will talk offline. I just DM'd you, so I look forward to speaking with you. All right, let's move ahead.
Same. Thank
Yeah,
you
let's move
all.
ahead. Thank you very much for your input. So let's move ahead quick. I just want to knock off there. I see 5 hands raised. Let's knock these off and call it a day. Jackson, you had a follow up, Jackson?
Yeah, I was just curious if I'm the only nerd in here that if I miss one, I listen to the recorded, or do you get any traction on the recorded, Georges?
Oh boy, Jackson, you wouldn't believe it. I mean, typically what tends to happen, there might be like usually. Let me just right now. This is a smaller room. One of the reasons was the Canadian oil mafia ran there. Unbeknownst to me, they started room exactly the same time. But you know what's interesting? We had, I think, as many as 400 in the room at any one time today, but it didn't at all detract from the quality, because look at all the great people we have in here. All right, so what matters is not really how many people are listening to the room. As long as I got smart cookies like you and O'Hare and Bobby J and Dave, it's all good. But so what'll typically happen is it'll be like, okay, 400 people, 600 people, 900 people listen to the room at any one time, and there might be 2 or 2,500 people who listen to the room at one point or another during the couple hours it's ongoing. So maybe we come out of the room, it'll say 2,500 people listened. But before it's all said and done, it's usually you're having 6,000 or 8,000 people listening in total. So there might be 2 or 3 times as many people listening to the replay as heard it live, and then this will really knock your socks off. 2 of the rooms we did recently, which were 2 of the most popular and best rooms we've ever done, I think the Michael Green one hit 25,000 total listeners, and the Michael Belkin one hit 20,000 total listeners. So what that means is 90% of the people listening did not hear it live. So what is your reaction to that, Jackson?
Wow, I think it goes with what you said. It's the best room on FinTwit, and it's growing organically. It's authentic, and with the brain trust that's in here on a consistent basis, it's unbeatable. I love Dave and Bobby J both, and O'Hare talking about a schedule. If you do a Wednesday, Saturday, whatever it is, and then pop up ones are always fun too.
We could have the ad hoc ones as well. I agree. And then listen, something like I say this a lot, and I don't say this gratuitously. I learn a lot from you. I mean, you know what happened? Like, take this room today. I look at the title I threw up there. Goldilocks is MIA. The Fed is trapped. Dunning-Kruger Effect. Okay, Dunning-Kruger Effect came from Mt. Gox, who's an old friend. He's been on this forever. It was just a stream of consciousness, looking at the Twitter feed, thinking about what occurred to me this week. There's no shortage of things to talk about. Mr. Market's providing the content all the time. But importantly and crucially, Jackson, it's people like you and Dave Coleman, O'Hare, and Bobby J. The room is not what it is without you people, because you're making me think. I'm learning from you, and it also makes the room authentic. And you guys are thought leaders. Okay, you're asking the questions or bringing up the subjects that's on everybody's minds. I think the reason people like listening to me is, look, I'm not the brightest bulb on the block. I'm not the dumbest bulb on the block, but I got more experience than most people, 40 years. And monkey see, monkey do. I mean, Peter Lynch trained me. I've been in enough meetings with, some of the greatest investors ever. So, you learn by imitation, right? And so,
George,
sorry,
one thing, I was
here.
just going to add one thing that's really, I was just, as I'm listening to you, I just had this thought about past spaces. And one thing that I've noticed, and I'm sure all of you guys have, is these rooms get smaller or bigger depending on the news flow, right? What's going on around us. So, for example, if Monday morning we wake up and we have a dislocation somewhere, the market's down 800, 900,000 points, and we pop up a space, you pop up a space about it, you're immediately going to get 1,500 people in this room. And if
100%.
it's a dead space time, like on a Saturday afternoon, it's very casual. Some people are going to hang out with their kids. Some people are going golfing. Other people are like, hey, you know what? I'm going to get up, have a cup of coffee, listen to George and his guests.
Oh, yeah, 100%. I mean, the news will drive the size of the room. The other thing is, there's some speakers, like, it doesn't matter what the news is. If I say, hey, Dave, someone with respect to you, O'Hare, or you, Jackson, or Bobby J, we don't have the profile that Dave Collin has. Okay, we don't have the profile that Jim Chanos has. So I could just pop up a room on a slow day and say, hey, Dave Collin, the man, the legend, blah, 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 conversation. People are going to show up. Ditto for Chanos. I mean, it happens every time. Belkin, Michael Green, Dennis Carpenter, just go down the list. So you're totally right, O'Hare. I mean, there are different draws here. It could be the news flow. It could be the topic I put up. It could be the speaker I advertise. I really like the suggestion that you made or somebody made that we have a regularly scheduled thing where, maybe we do Wednesday and Saturday. And then there's the ad hoc, thing when circumstances dictate. So terrific idea, O'Hare. Appreciate it. All right. We got 4 hands left up, and then I'm going to be done because this is going to be 3 hours by the time. It's 3 hours. Bobby J, we want this 3 hours. It's unbelievable. It's like, my partner Susan's like, can we go out for a walk now? I'm going to have to fight her off. All right. Quickly, guys, keep the questions short because I want to get out of here. Jeffrey, what's up? You got a question, Jeffrey? Jeffrey?
Yeah, absolutely. You're not going to get this sort of audience participation in a YouTube or a Spotify, and I think that's what gives this program such strength is all the brain power,
fluidity,
the experience. You're not going to get that anywhere else. But what you could do is record this and put it on a podcast like Apple Podcasts, just the recording of it, because it's so valuable with the audience participation and interaction and the experience that you guys have and the exchange of knowledge in this platform. I think you're not going to get that anywhere else on any other platform. So that's just my 2 cents on that. So record it.
No, Jeffrey, I record all of them. My question to you is, I get it. I'm 100% with you. So let's say I record this and then I go put it on YouTube, Apple, Spotify, whatever. Okay. Do you think the recording is available here? But do you think that as many people are on Twitter? I mean, I know it's a question of distribution channel. Do you think there's a whole cohort of people who would listen to it on Apple, Spotify, or YouTube, but are not listening to it on Twitter?
I would think so. Yeah, anyone who's interested in finance, I believe so. The economy, finance. I mean, you don't just talk about finance. You guys talk about basically current events, culture.
No, Jeffrey, I agree with that. But what I'm trying to get at, and O'Hare or Jackson or anybody, please jump in here.
George, absolutely, Les. You can look up podcasts by categories on Apple. If you go on Apple, if you think your recorded audience here is 90%, you're going to get, Apple will get you to 1 million.
I think Bob's absolutely 100%. I mean, there are a lot of people that commute to and from work, to and from classes at universities, just whatever.
Right.
And
right.
they're not.
So O'Hare and Bobby J, I want to understand something. If I'm telling you that, I get 600 or 800 at any one time in the room and 2,000 over the course of the room, and I get 10,000 all in when they listen to the replays, you're telling me if I take the recording and put it out to Apple or YouTube or Spotify, instead of 10,000, it's going to be a much higher number on those channels?
Yeah, and by the way, with a full throttle marketing plan, you're going to get to 1 million. And
okay.
and we can talk about that.
Sounds good. Jackson, you quickie?
I was just going to say that's why I was so encouraged to get those numbers from you on the replay. That's very encouraging. Way to go, bud.
Yeah, no, the replay numbers are running 10 times the size of the live.
And actually, you guys can see the replay numbers when you go to George's profile and he does the recorded. You can look at it and see how many times it's been viewed, listened to.
Yeah, I appreciate that, Jackson. It's really good advice for you guys. All right, we're going to go quickly here. I want to be done. So I want to do Philo Investor and then Pashu. Philo Investor, what's up?
Hi, guys. Yeah, real quick. So I just wanted to say that I agree with O'Hare about the whole bottom-up organic audience from Twitter. And I mentioned you, George, in a small thread I wrote a couple of hours ago about how Twitter is investing in the whole podcast-related offering, competing with Spotify, finding ways to monetize the content on Twitter. So I wouldn't worry about monetizing the content. And obviously I support recording and putting the content into other platforms as well. I mean, you don't miss anything, but it's more lively here on Twitter Spaces. That's number one. The second point real fast is that the whole talk about macroeconomics and the Fed and how the Fed is stuck. I did a multi-month research a few years ago about Japan and their own fiscal monetary situation, and I see many parallels and I just wanted to share that with you. If that's okay, we should find a way to
Yeah,
share
yeah,
it.
yeah, yeah, yeah. Philo, I'd love to talk to you. It's just in the interest of time. I want to. Well, we need to do it offline, DM, or we
Sure,
can exchange phone numbers and talk. I have a lot of
sure.
thoughts on that. I'm a summa cum laude graduate of the Japanese bear market of the '80s, so I
Hmm.
actually, don't ask me about biotech stocks. I'm useless, but Japan, I know something about. So happy to
Perfect.
talk offline. All right, thanks for that.
Ciao.
We're gonna do Pashu and then Andrew. Pashu, what's up?
Hi, George. Thanks. I just wanted to make a comment in exactly what Jeffrey said. I think the interaction that you have on Twitter is unmatched. The fact that anyone can come on and ask questions to pros is incredible. I think the content that you have is so good that something structured that you publish on YouTube or Apple Podcasts, that could work as well. But O'Hare kind of touched on this too. Twitter is absolutely incredible and just the best platform as far as interaction is concerned. Another little comment I wanted to make regarding Michael Belkin. He was on the All Hail Com Room yesterday, and he was on there for a long time. He didn't speak. So you're adding to the lives of professionals who didn't even have phones a couple of weeks ago or so. And I just wanted to make that comment.
No,
So
Pasha,
thank you.
Masha, I appreciate it. What room was he in, or what was he on? I didn't
The
know that.
All Hail Canadian Oil Mafia room that kicked off right
Oh,
after you got on the phone.
so wait, so he was in the mafia room. Did he speak, or he just sat there and didn't say anything?
He did not speak, but he was there for a good 30, 45 minutes, and I was on there too. So,
and I'll just tell you, like, we're gonna get him back. He is such a fine human being. He is so bright. He's a Cal Berkeley statistics major. Like, unlike these, idiots who were he is the real deal. And again, for those of you who didn't listen to him, go back and I saved all the things, so I'm gonna find a way to put it back out. But please go listen to. It was it was only 2 hours, but it had like 20,000 listeners. It was about 2 weeks ago, and I talked to I'm in contact with Michael every few days, and I know what he's saying. I get his research. He hasn't changed. In case you're wondering, this is just a bear market bounce, and he's just got to time it and go short again. For those of you who care. And by the way, his call on energy and gold. I mean, not to shill for him. I have no commercial relationship with him, but nothing but net. So this guy is the real deal. Trust me. All right. Thanks for
George.
that, Pasha. Appreciate it. Thank you. All right, we're gonna do Andrew, Brad, and Kevin, and then we're done. Andrew, what's up?
Hey, George, thanks for having me up, and thanks for these sessions. I've learned so much over the last month. One thing I'd like to say, well, there are two things I'd like to say. One is that content is king, but distribution is God. And I learned that from video game professionals in the mobile space. And distribution really means friction to engagement. And Twitter Spaces, in my opinion, is the least frictitious way to engage an audience and have a fluid conversation like this. And so that leads me to my second point, is that there are two things off the top of my head that I think make this work in the manner in which it does. Is one is the fluidity of conversation. You have people interrupting, you have people not interrupting, you've got ideas coming from left field, you've got change of, the tangents happening all the time. And then coming back to the main point, and I think it's the organic nature is one of the things that makes it work. The second thing that I think makes it work is that there's no financial incentive. And once you get onto a distribution platform like Bloomberg, like Spotify, like these certain places, they're going to have a list of things that no, you can't talk about that, or you get a slap on the wrist. So and then a final thing, I saw that you're going to be speaking at Georgetown in maybe 2 weeks or so, and I was wondering if there's an after party for that. So anyway, thank you so much. Yes.
By the way, Andrew, how did you find out about that? By the way,
I know a guy who teaches in the law school over there, and we got to talking about it. He says, "Oh yeah, a buddy of mine who's part of the finance school, and then you might want to check out some of the sessions."
No,
so
that's funny. No, I got invited to that because the guy behind the program, one of the sponsors of the program, is a friend of mine. He said, "Would you mind coming to Georgetown to give a lecture?" I said, "Fine, I'll do it." So I'm taking Amtrak down to DC. I think it's a week from Tuesday or something like that, and it should be fun. I don't know. It's funny. One of the things I asked, I go, "Well, is there a reception?" Right? They're not doing anything. So if you wanna put something together or whatever, I'm all in. But it's funny. Anyone listening the other day, I mean, I kind of made a fool of myself. It was totally ad hoc. I went to this reception there was this trader reception, at Sally's Pizza in Stamford, Connecticut, and Tommy Thornton had tweeted it out and the morning of, and just so happened I was able to get there that night. So I show up, and it was great. We did this crazy. We did it totally. To O'Hare's point, it was totally ad hoc. People loved it. But anyway, this Georgetown thing is totally just to. I think the topic is explaining the difference between running a hedge fund versus running a mutual fund or something like that. So I'll be my usual irascible self. Maybe I should even ask them if we can turn the Twitter on, make the people could listen in or whatever. But there is a recording. There will be a recording. I don't know if it's going to be widely disseminated. I will talk to the Georgetown people and ask them, but should be a lot of fun. So thank you for that, Andrew. I really appreciate it, and look forward to talking to you back channel via DM. Thank you for the input, Andrew. Really appreciate it. All right, so last two questions, Brad and then Kevin. Brad, what's up?
Hey, George, I'm the executive producer of the documentary series Dirty Money on Netflix. I'm also the executive producer of Apple's first original podcast, which came out last year. I've DM'd with you. We should just talk. I would probably take about an hour for me to give you a mini master class about, let's call that the traditional side of the business, so that you know the pros and the cons. I do kind of agree with a lot of the people to maybe not go that route, but you shouldn't turn down something when you don't know what you're turning down, and that's what I do. So I've DM'd you. If you want to chat, hit me back, and I'm happy to spend an hour with you on the
Brad,
phone.
I really appreciate it. I mean, I think talking to someone like you would be incredibly valuable. I have two objectives here. One, I'm just trying to help people, and I've been very fortunate, right place, right time. I was trained by the best people, and I think I'm honest. I think I'm hard working. I make plenty of mistakes, but I think people can relate to me because I'm not trying to sell them anything. And people just dying for information. So one, I want to get the information out to a bigger audience. And then two, if I am going to invest more time in this, I would want to think about monetizing it, but I don't want to charge anybody for it. I want it to stay free.
Yeah.
So I know there's a business side to this with the advertising, all that kind of stuff. I think a conversation with you, monetization 101 for dummies would be highly helpful to me. So why don't you and I be in touch? I saw your DM. I'll be in touch with you. I really look forward to hearing from you.
Yeah,
George, I just had
another thing, just one other thing, and then I'll duck off. I got into the business for the exact same reason. Literally, I was accepted to grad school with pretty shitty undergrad grades because I said I believed in my ability to both educate and entertain, and that's what you're doing. And God bless for doing that. And so that's the only reason I'm offering it up, is because we're both, swimming down that same stream.
Yeah, it's funny because you and I are soulmates that way. You're offering it up because you were there and you want to help someone with the same problem you had. And I'm offering it up because
Correct.
I was a kid in 1981, didn't know shit, and I happened to show up at Fidelity Investments when the S&P was at 775, and Peter Lynch was my boss. Like, how good was that? So I want to pay forward. I want to pass on what I got from those who went before me. So that's why I'm doing it.
Well, and I have an undergraduate business degree, and I couldn't agree more about the financial literacy and even stock market and bond and debt and Fed illiteracy. So kudos to you.
Appreciate it, Brad. You and I will be in touch. All right, O'Hare, do you have a comment? I think you and Brad.
Well, yeah, I was just gonna quickly say, you could still monetize a portion of these Twitter spaces, but what would be really cool if you were to get to a point where you could do that, if you had a personal charity to have the proceeds go to, or even like a business school alma mater to do a fellowship program for somebody, something like that would be fantastic.
So here, you might know this, but a few weeks ago, I made mention in one of the spaces that we were working on something behind the channels to back channel to do exactly that, get to charity. But it's one of the problems with Twitter. Turns out the individual who contacted me, because this individual was in one of our rooms, and this person comes across, oh, I'm a fundraiser, and this is my life dream to help people, and blah, 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 blah. Well, someone else in these rooms, I'm not going to mention names because he's been subject to enough controversy as it is, who's also very philanthropic. We engaged this person to help build out a plan, and I spent a few hours on the phone, and this is what happens. And we soon realized, like 6 weeks into it, scam artists, or not scam artists, very sketchy. Like, it didn't make any sense. Like, something wasn't right. And so just to let you know, so I had this instinct to engage.
Well, yeah, vetting people here on Twitter, that's the hardest part, making sure their intentions are true. And there's a lot of shit going on. Yeah, I agree with you.
Totally. All right, last one. Kevin, you're up. What's up, Kevin?
Thanks for having me on, George. Can you hear me okay?
We hear you fine.
Okay. Yeah, I just wanted to say that like I joined into this a few weeks ago, and I think there's a real magic here. And I just wanted to say that in terms of scalability, I think that right now you've got a certain intimacy to this room that allows you to hear from people from all kinds of different backgrounds and experiences. Just to give you some idea on mine, I'm actually a former institutional guy myself, and I think that since I left the business formally, this is the closest thing that I've seen to actually what would have been investment committee meetings previously, where you would get people in bonds, you'd get people in currencies, you'd get people in equities, and a lot of different perspectives on what's going on in the market. And I haven't seen any other platform that really offers this. I think, if the concern here is scale, well, you're already seeing that. You've got the intimacy of the room, and yet you're still getting 20,000 people show up for the replay. I think you may have already answered your own question.
Right. So I agree with both. You know what this is kind of like as I think about this? It's kind of like professional sports or any spectator sports where you got the people, let's say it's a basketball game. You got the 18,000 people in the arena, but the real monetization occurs from the TV and all the ancillary revenues. And what you don't want to do is play in a, if you were to play in as they do, you play the NCAAs in a 60,000 seat arena, it doesn't work. You need to keep the intimacy, to your point. But so you can have your cake and eat it. What I've heard here, what's kind of opened my eyes, what I really like the sound of is we continue to do it on Twitter for all the reasons that have been mentioned. It's the most interactive, it's the most open, et cetera, et cetera, et cetera. And nobody pays anything, no nothing. And it's all free. And the other thing I like is I think people respect me enough where I keep this on a tight leash. And, if you got game, you know what you're talking about. You get all the free rope. You never get dissed by me. But when some yokel comes in here and tries to turn the table over and mess it up, I just shut him down. And that's for everybody's protection. And Gnostic, I'm going to get to you in a second. So I like your point about the intimacy. We have to retain that. We have to retain the interactivity of it. And the regulars that come in this room come in for a good reason because we all learn from each other. But then
I think
but
so much value in that sense.
When it goes, so we're going to keep all that. So I think where I need so I don't need help with the content. The content I got, and I got the connections. I can get people to come in here. What I need help with is figuring out whether it goes into YouTube or Apple or Spotify, how to distribute that and how to monetize it off of that without upsetting and I'm totally happy. If I'm going to spend more time on this, I want to get paid for it. I'm totally all right. Here's one for you. Put the cat amongst the pigeons. What if I said, okay, we're going to keep it as it is. We're going to distribute it out to, these other things, Apple, Spotify, whatever. And oh, by the way, whatever percentage money I get from these other places, I'll earmark Y% of it for charity, period. And so, and you could even put up a GoFundMe. We almost did something, and I think I may still do it. I was going to put up a GoFundMe page because people said it's the easiest way to do it. A GoFundMe page originally was going to be for like feeding people in Africa. That was the discussion. But given what's happened in the Ukraine, the thought was, and I just was doing work in this last weekend. See, guys, there's a lot of stuff going on you don't know about. And so the question was, you got to put up a charity that's apolitical. And so the thought of, Doctors Without Borders or something which is unassailable, that has a high efficiency ratio and is not political, that nobody can object to. And my thought was, before even trying to go on a grander scale and monetize this thing, was say, okay, you know what, boys and girls? I had somebody, I think I tweeted this out. Somebody the other day said, I want to send, I didn't ask for this. He goes, do you have a favorite charity? I want to send in $50 to that favorite charity just because I get so much value from these rooms. And, I want to give $50 in your honor. I don't care about the honor. I don't need the recognition. But I was like, you know what? I'm giving this all away for free. I don't need the money. I don't want the money, but if I'm going to spend more time, I do want to get paid for it. But I'm like, so the original thought was, you know what? I'll just set up a GoFundMe page And anytime someone comes in these rooms and they think they got value out of it, they can just give money to the charity. And that seemed to really hit a positive chord with a lot of people. And like I said, we went down this road of trying to set that up. There's a whole thing about you have to have a committee and, they want to make sure I'm not putting the money in my own pocket and blah, blah, blah. I get all that. But then in the middle of it, the person who was helping us with it, she turned out to be a real sketchy individual. So we bagged that. But I think there's tremendous value being given here. And I know everybody wants to give back. And I think if people feel they got value from this room, and I know they do, don't give me the money, give it to the charity. So anyway, hey, Gnostic, I want to hear from you, man. What's up?
Just George, the front end of what I'm going to say is thank you. Thank you for the rooms. Thank you for putting this stuff together. You're one of the best hosts on here. And you sit on top of people like me that open their mouth a little too much and tell us to shut up. And much as some people might think that's a little aggressive, it's much appreciated. Just the control function alone, not just on me shutting up when I get too carried away, but just on everybody. And it gives a control to the room that's really valuable. But like we've said in some of the other rooms that have happened and some of the places that have happened, the educational part of this, and again, I'll go back to the discussions we had, and some of the people in the room here have been in the rooms before. There's so many people out there that don't know how to even carry on a decent conversation, that don't know what defamation is, that don't know what libel is, that don't know what communication is, that don't know the rest of the stuff. And like I've said before, these rooms are going to become so important down the road for people that you can trust, people that you have faith in, people that you can listen to, because the nasty stuff we've had with COVID, the stuff that's going on with governments and closing stuff down and aggressiveness and all the rest of the stuff, these rooms are going to become really important. In the background now, I'm working with a couple of people that were in the truckers convoy to set something up so that you can't be blocked. People can't steal the money that goes into a GoFundMe page and all the rest of the stuff, and also set up a bunch of monetizing stuff. And we're doing stuff in the background to make sure that the internet is still going to be a free and accessible system for people to find and access. But that's all my background stuff that we're doing in the background. But when you sit down and say, here's a charitable thing, I haven't found, and I think somebody else was saying this before, I haven't found a room where, if you go in and say, how many people in this room have a Bloomberg terminal, and you see the hands pop up, I mean, it's like, my God, that thing is expensive. You have to be, significantly in the business to be able to have that. But to have that many people in a room like this, where somebody who's never traded before and is looking for advice can come in and talk to people, just the cost alone of trying to access somebody like you, me, some of the other people in this room is just horrific. To get it for free, oh my God,
amen, brother.
That's just a gift to the world. And it's completely, I mean, it's incalculably valuable to people. I don't even have a word to sit down and describe it. And a lot of these people, they're too busy. There's too much time. Other people have too much time. I think the GoFundMe page is one of the best ideas I've heard, just to sit down and say, hey, there's somebody I trust that's running a GoFundMe that says it'll go to the right place, that'll sit down and do it. Yeah, I'll throw in a couple $100 into GoFundMe today. Just to sit down and say thank you for doing the rooms and everything else, and to feel like I've been able to do stuff. I'm helping people in Ukraine right now, just literally sending the money, because I've got no other way to send the money right now.
I know. And so Nasser, just listen to what you just said. I mean, people are getting tremendous value. It could be life-changing, the advice they get from these rooms is much better than the crap they're getting from the street. And you're learning. And you have a chance to give to charity, to give back. I mean, hello, seems like a good deal to me.
Well, I mean, it's phenomenal. I mean, and the people here that have garnered the knowledge, one of the things that is a problem for them is to find out how to pass that knowledge forward. How do I educate other people, not this same mistake?
Did he just break up, or is it me?
Thank you.
Thanks. All right, we're going to close this room shortly, unless I hear you want to keep talking, because I got to get out of here.
No, I'm good. Fantastic.
All right, so let's just one or two more, and that's it, because I'm really kind of tapped out. We're going to do Brad. Brad, what's up?
George, an honor.
Yeah, Brad,
George,
what's up? Yeah, Brad, what's up?
George, if God makes you Dr. J and you got 20,000 people that want to help you, just go with the flow. Thank you very much. And thank you to all the kind, brilliant people in this room every day or whenever you share. Thanks. Bye.
Thank you, Brad. God bless. Brian, you're, let's see. Ernest, you are the last one. Ernest, what's up?
Hi, George. Thanks. I've been listening to the rooms quite a bit. I'm from South Africa, 20-year sell-side analyst. I'm not an expert, but I'm finding the content that you're sharing and the guests is what's keeping me from, coming back just to listen in. I don't enjoy all the material because a lot of it isn't really applicable to me, but when you start talking about stuff that interests me, then, I go on hyper alert. So I enjoy just tuning in when I've got time, hearing what the guys are saying, and I've grown to enjoy it more. My advice to you is, think about what's happened on Twitter. Spaces has actually allowed you to get to this position. And I think I echo what everybody else said, that it's really powerful because I think your strength is the way you're moderating these rooms and the way you're able to talk to all the people, the way you sometimes cut people a bit shorter or ask follow-up questions. I think your style of conversation suits this platform perfectly. So I would just say pipe it off to the other platforms and then maybe just tweet out every now and then, oh, this show was fantastic, or this room was fantastic. We had some really intense discussion about this topic. And then people can go and listen to the recording. But I think you're doing great. Just carry on.
Thank you, Ernest. That's really good advice. One thing that occurred to me as you were speaking, someone made the suggestion earlier, and that was they were asking me if any of these recordings are available on another platform already. Why? Because I guess you can't listen to the replays at an enhanced speed. I listen to a lot of replays on webinars and whatnot, Zooms on 150, 200%. And, you could slow it down when it comes to interesting point. But the suggestion was made, if you could listen at a faster speed, you get through these things more quickly. So question to anybody on stage, the ability to listen to a replay more quickly, to me, that would be appealing. Does anybody on stage have a feeling about that?
Yeah, I think, there's all these tricks you can do. The other thing is if you pipe it through to YouTube or Spotify, there may be a way that you can bookmark certain sections in the 2-hour session where if you go to minute 37, you can hear the big debate that you guys were having about a particular topic. You could highlight a couple of those areas. It does take a lot of time. I guess you may need to get somebody to help you. But I think that would add huge value. But I think, what you're doing now is fantastic. Just carry on. I mean, this is live.
I like it. And I think your point's great. You bookmark. We could say exactly. I think you're spot on, Ernest. Thank you for that. All right.
Pleasure, and thanks for all your efforts.
All right, last two. I'm gonna do Andrew with a follow-up, and then Brian. Andrew, what's up?
Yeah, again, just to reiterate, content is king, but distribution is God, and you really have to go to where your audience is. Right now, Twitter is the current audience, but you have to also go to the YouTube and Apple and Spotify and Facebook and every other bloody audience to try. If your goal is to reach as many people as possible, you have to go to where they are. So that's number one. And number two is definitely, I think if you go on SoundCloud, for example, they've got a commenting system where essentially people can contribute and bookmark certain sections of certain things. And YouTube also has that. So you can just click on, the time frame with a topic linked to it. If they're, don't care about bonds, but they really care about equities or, real estate or what have you. So there's a little bit of infrastructure and a little bit of elbow grease that has to go into something like this. And, I guess we can talk a little bit more in back channels. So again, I just want to say thank you to all of the contributors and to you for hosting these.
All right. Appreciate that, Andrew. I'm going to do one last thing. We're going to have Brian, but one last thing. I see my good friend Dr. Jim Walker has snuck into the room, and if he'd be so kind, I'm going to invite him up to speak. If he wants to grace us with maybe a quick 5-minute update on what's changed since he was last on, that would be wonderful. I don't know if he's available to do so, but that would be great. Otherwise, if he chooses not to speak, we're going to have Brian ask the last question. Brian, hello, what's up, man? The floor is yours.
Hey, what's going on? Can you hear me?
We got you. What's up, man?
All right, yeah. So I think a good thing to do would be on YouTube, you break it down, and then you have like 2 people review it, kind of like what they do in rap video reviews. So you have them listening to it, and then they review and explain exactly who is talking at the time, and what it will do is give the people an introduction to who they are and how they might be interested in them, and then I think it'll push more people to the spaces if you want to get innovative with it.
Really appreciate that input, and I hope we're probably going to talk about this some more. This is really the first go round,
Okay.
But I value your input. Everybody's in here. This is great. We're gonna make this thing a huge thing, and you know what's going to be really cool? The room will probably. I mean, I suspect eventually the room will get bigger, but that's not the point. If we just continue to have the regular 400 or 500, 600 people in the room,
yeah,
kind of like we're in the studio, we're doing the show, and then if hundreds of thousands of millions wind up seeing it on Apple or Spotify or whatever, okay, listen to it, that'd be awesome. So I think this is great. I think we can have our cake and eat it. So this is awesome. Thank you, Brian. Really appreciate it.
All right, cool.
All right, our last, and again, where else on Twitter? Where else in the world could you possibly find this? We have we got, I think, the best content bar none. And we talk about the friends and the connections, and he just happens to be Jim Walker, Dr. Jim. We had Jim Chanos in here, another Jim, 2 hours ago. All right, totally unscheduled. Jim, Jim, how have your horses been doing the last couple of weeks?
Yeah, well, this is the start of the flat season in the UK, George. So this afternoon's been taken up a wee bit with horse racing, and then I was watching my football team draw 1 each with Ayr United, which is not a particularly good result, but that's what's been going on this afternoon. Now I'm watching the Red Sox and Rafael Devers scoring 2 home runs in the first 3 innings. So it's a wee bit of a sporty afternoon.
Hey, Jim, you know what I'd love to have happen someday? I'd love for you to hear a broadcast of a Red Sox game with your accent. That'd be fabulous.
Yeah, I don't think anybody in Boston would want to hear that, George, but never mind. But I've been listening for a wee while, just in some of the comments, and I couldn't agree more with most of the guys on here saying that it's a fantastic forum, absolutely amazing. I listened yesterday, and just backing up what you're saying, that it's not everybody that listens live. I mean, some of us are in a slightly different time zone, but I listened to the 3 Aces conversation yesterday, and what an amazing expose by you and the guys for some of the shysters that are in Twitter and God knows what all, that just don't want to acknowledge who they really are, and then come on and criticise people and make up all sorts of things about them. And this forum is brilliant for doing that as well, just giving people who deserve a platform a space to do that. So thank you very much for doing the stuff for David Morris. That I thought was brilliant over the last couple of days.
No, Jim, much appreciated, because God forbid any of us find ourselves in his position. It's just outrageous what happened to him.
No, I can fully understand that. I mean, you were asking for any updates. The only thing I would say that's a big update in the last week or so, apart from the fact that I've managed to catch COVID and now got over it, which is almost something of a relief. But the big update is the change of attitude in China. over the course of the last 2 weeks from a country that seemed actually very relaxed about everything and very relaxed about the way that things were going in the economy and the stock market. All of a sudden really switched tack and started talking about bailing out stock market investors and intervening in the market to make sure that things didn't go down too much. So my view was that there was an interesting element of panic there. And I don't really think that the Chinese panic very much in terms of economic policy and in terms of the way things are going in the markets, etc., etc. But this last couple of weeks was a very significant change of direction for them, which I would say to everybody online, take it as being the Chinese being much, much more concerned about the state of the global economy than perhaps you had understood or anticipated. Because that's the kind of thing that they do when they think things are not going well at all. And it's not anything really to do with their own domestic economy because they've closed it off in so many ways as a result of their zero COVID policies. But I think it's an indication of what they think's happening globally, whether it's the Ukraine war, whether it's the Fed, whether it's what's happening in the markets. But they are real students of developments and things that are going on in markets and the global economy. And that change of direction for them was a big, big signal to me that we're all in trouble.
So, Jim, it's signaling we're all in trouble. I got it. But there's also signal to you that they're likely to become a bit more aggressive, or shall we say less passive in what they're doing?
Sorry, George, you were breaking up on me there.
No. So do you think we're likely to see more of a policy response from them?
Not a huge policy response, not in the sense of cutting interest rates particularly much. You know, the authorities in Beijing are actually much more about the talk rather than the walk. But even talk to them is sending signals, and that's what they're all about. And you know, actually, I think. I mean, it's bizarre as you might think about it. The Chinese are actually much more about market signals than any of the rest of us are these days. And all I'm saying is that the signals that they're sending just now, and especially that change of direction over the course of the last 2 weeks, should be a big signal to everybody. But what I think they're saying is, you guys need to, in their own economy, you guys need to understand that we've got problems in the global economy, and those problems are not going away.
Okay, so to you, the real message here is it's validation, a signal from the Chinese is validation that they believe something's really very problematic right now. Is that what you're saying?
Absolutely right. Yeah. Now, I'm not saying that it's all down to the cost of oil or the cost of iron ore or shipping or XYZ costs. I'm saying that they're frightened about something, or they wouldn't change direction in the way that they have done, and they wouldn't start talking about bailouts in the way that they have done. That's just not their nature. And in that sense, I think just people should sit up and take notice purely on the basis that they've seen something that they don't like.
That's great, Jim. Appreciate that. I'd love to have you come back. Maybe we could set up a time or a day, come up and speak again a little bit. Or
yeah, anytime, George. And if I can get onto a better time zone with you, even better.
I got it. All right, listen, this has gone on. Appreciate that, Jim. This has been awesome. Thank all of you. The room's not possible would be the high quality it is without you, all of you. And we'll be doing this again before too long. So everyone have a good rest of the day and a good weekend. Take care. Bye-bye.